So let's start income from salaries revision. So the moment you think of salary, it is a first head of income where the charging section is section 15. And in salaries, we only have three sections. One is 15, another one is 17 and 16. Nothing but 15, 16, 17. 16 talks about deductions from salary. 15 talks about charging section, whereas 17 talks about getting it. What do you mean by salary? What are other things that are taxable under the head salaries? So 17 subsection 2 says perquisites is also treated as salary because perquisite is a benefit received from employer by an employee. Profit in lieu of salary. Instead of salary, you're receiving something else, lumps of money. That is also taxable under the head salary because it is received from past employer or current employer. So that is what salaries is essentially talking about. Now, charging section. What the charging section says. First of all, before I even discuss about charging section, what is the overview of salary? You see, under income tax, under the head salary, if an employee is receiving any benefit from employee, getting it, these benefits are taxable under the head salary. Now the benefits are broadly divided into two categories. Benefits received when the employee is working. So I am working in a company. So every month in this year, whatever the financial year I'm working, I'm getting some benefits. So benefits during the service. And I may receive certain benefits at the time of retirement. Generally at the time of retirement, we generally receive monetary benefits. Whereas when we are in service, we receive two categories of benefits. That is monetary benefit, non-monetary benefit. And what are all the monetary benefits that you receive? What are all the non-monetary benefits that we receive is what given here as a list. I'm giving you this list which is important from exam point of view. More than this, let us assume if in salary we are discussing some 50 issues, 50 types of benefits. Out of 50, I have covered almost 40 items here. 10 items are not at all relevant. That no use at all. Getting the point? So all the benefits that are important from exam point of view, I'm covering. Getting it? Now, so what various benefits that we get, we have listed out. Now these benefits in the Bear Act, in the section 17, the benefits whatever I have showed right now, getting an overview, they are classified into three categories. Some benefits, they are called as salary. Some benefits which SSE receives, which employee receives, either monetary or non-monetary, they are called as perquisite. Some benefits are taxed under profit in lieu of salary. Now, many students get confused. What do you mean by salary versus perquisite? How they both are different? Salary means something I pay to employee and I don't ask him any question. What purpose he is spending doesn't matter to me. All the allowances, getting it, basic salary, dearness allowance, whether this DA is for retirement benefit or not retirement benefit. In exam they may give you for retirement or forming part of terms of employment, any word they can give. Nothing but this dearness allowance is something which is considered for retirement computation benefits of that employee. Remember, DA you will find only in government companies and government organizations, not in private sector. Dearness allowance is not compulsory in private. You don't find in any private sector DA. And bonus, commission. Commission is again two types, percentage of turnover and fixed commission. Getting it? There are two types of commission. Either it is given as a percentage of turnover or fixed commission. Getting it? So bonus, commission, DA, basic, entertainment allowance, HRA, house rent allowance, leave encashment, gratuity. Getting it? So all these items, contribution by employer to provident fund in excess of 12% of salary, contribution by employer towards interest in excess of 9.5% rate of interest, contribution by employer to pension scheme. All these are monetary benefits which are directly given for the purpose of employee, directly monetary benefits. These are all treated as salary within the meaning of 17 subsection 1. Now what are all perquisites? Perquisites means salary is something which I give and I don't ask any question. Or on the employee name, I will give some benefit to the employee monetarily. That and all salary. Now the perquisites, again this may be two types. Either the perquisite is reimbursement or the perquisite can be non-monetary facility. The perquisite can be either a non-monetary benefit facility or it can be a reimbursement. Remember, only reimbursement and non-monetary benefit given to an employee comes under perquisite. Getting the point? Suppose employee is incurring some medical expenditure. We are reimbursing that. Company is reimbursing. It's a perquisite, taxable in the hands of employee. Of course, we have some exemptions. We'll discuss later. Getting it? And suppose we have given a car facility. It's a perquisite. whatever the valuation rule, perquisite valuation rule, we compute some value, we will tax it accordingly. We are giving some furniture to the employee for usage. It's a benefit given to the employee. It's a perquisite, non-monetary. So perquisites are basically reimbursement and non-monetary benefit. Reimbursement means what? First of all, perquisite means something which is given for personal benefit of the employee. Perquisites are nowhere related to official purpose. They are absolutely, completely for personal benefit. Only employee will get benefit there. No benefit to organization. So those are called as perquisites. These personal benefits are either reimbursement. Reimbursement means what? Employee incurred some expenditure for personal reason. That amount, he showed me bill, we are reimbursing it. Suppose employee went and bought some, spectacles, yes or no, or lens, or he went for laser treatment of eyes, whatever, something. Company reimbursed the expenditure he spent, showed the bill, we gave the money. It's a reimbursement, it's a perquisite. Or facility like car, getting it? Education facility, medical facility, various transport facility, getting it? So these are all facilities. Both are treated as perquisites because these are used for personal benefit of the employee. Perquisites are taxable. We have some exemption rules. Now, sir, reimbursement means suppose company reimbursed 1 lakh. If say employee spent 1 lakh for personal, company reimbursed 1 lakh. Accordingly, 1 lakh is taxable, sir. How to tax non-monetary items? Suppose company gave car, sir, car facility. Okay, how to tax this item? Valuation rules were given for perquisites. Those valuation rules we have to apply. Getting it? Fine. So salary means all monetary items which we give to the employee. We don't ask any question there. Okay, basic salary I am paying, DA I am paying, some allowances I am paying, bonus giving, commission, whatever. Getting it? All these items are salaries. These are all allowances. All items which are in the nature of allowance, allowance means what? I pay money at first. I don't ask what he did with that money. So those kinds of money, whatever I give, that's called salary. Suppose an employee joined in an organization, you are paying 50,000 salary to him monthly. Do you ask him what is the breakup of 50,000 for what he is spending? No, that's a salary. All the items that are salary or in allowance in the nature of salary, that and all taxable under 17 subsection 1. They are all treated as salary. All the items which are personal purpose, where you are reimbursing or where you are giving a facility, whatever the value you are giving, that is taxable as perquisite. Perquisite is also treated as salary. Able to understand? Now, charging section. What the charging section says? Any sum due from an employer by an employee, any sum due from the employer during the previous year is taxable for salary. Second, any sum received from employer is taxable for salary. Nothing but if you collectively read, if any amount is due from the employer or received from the employer, whichever is happened earlier, so it is taxable. That's why they call it as due basis or accrual, receipt basis, whichever is earlier. Due is different, accrual is different. Suppose if April month salary, current month salary is due on 1st May, then 1st May, April month salary is taxable when 1st May it is taxable. May month salary is taxable in which month? June 1st. March month salary is taxable in April 1st. March 2023 salary is taxable in April 1, 2023. April 1, 2023 comes under 23-24 previous year. You understand? Accrual means what? April month salary taxable in April only. When you pay, doesn't matter. March month salary taxable in March only. When you are paying, doesn't matter. That's the difference between due and accrual. Salary is head of income. Salary is taxable on what basis? Due basis it is taxable. Able to understand? So, what are all the due dates are there in the previous year? Salary due dates, check out. On these due dates, how much amount of salary became due? Check out. That much only taxable. Sir, the amount of salary was due, no. That is belonging to last previous year. Doesn't matter. It became due in this current year, no? It is taxable in current year. Same way, if at all an employee received salary in advance, next month salary I received, in March month only I received next year April and May month salary in advance, and I told employee not to pay me April and May again. Amount received in advance is taxable in the year in which it is received. Suppose if I receive a loan from employer, which is where employer will deduct from my salary in 20 months, that's a loan. Loan is not a salary. It is not taxed as income. However, on the loan, interest amount I am not paying to the company. I took a loan from the company, but I am not paying any interest to the company. It's a benefit received by me. It is treated as perquisite. For that valuation rule is that we will discuss. I hope now you understood the charging section briefly. Getting it? Now, what are all the elements that are there in salary? There are various elements. You have something called salary, which is including basic, DA, whether for retirement or not for retirement. Retirement is also expressed as terms of employment. In exam, they may give you DA for retirement benefit, or within bracket, they may give you terms of employment. Bonus, commission, whether it is percentage of turnover or fixed commission, everything is monetary benefit. Transport elements, children education elements, children hostel elements, HRA, telephone elements, medical reimbursement. Remember, reimbursement is a perquisite. Lunch allowance is a salary. Gift allowance is a salary. Interest free loan is a perquisite. Contribution to RPF is a salary. Interest on RPF, that is a salary. Leave travel concession is a salary. Yes or no? Tax paid by employer, on the salary of employee, that is exempted. Life insurance policy on the employee is exempted. Medical policy on the employee is exempted. All these points now we are going to cover. Are you clear? Now at the time of retirement, a person might get gratuity, pension. Pension, there are two types: uncomputed, computed, leave salary, voluntary retirement receipt, retrenchment compensation. But retrenchment compensation we are not discussing because it is not at all important from exam point of view. Further, he will get non-monetary benefits like accommodation, mobile asset, car, medical facility, telephone facility, all that. Now, one by one, we will be discussing. Now, so, we will be discussing accommodation facility at last. So, first I will be discussing, if at all an employee is retiring, what benefits he is getting. So, one benefit which employee might get is gratuity. One benefit which employee might get is gratuity. Remember, if gratuity is received on retirement, exemption under 10 clause 10 is available. There is a section called 10 clause 10. In that clause, exemption is given for gratuity received on retirement. If at all gratuity is received before retirement, during the service, fully taxable. Now, if the gratuity is received by government employee, for him it is fully exempt. If the gratuity is received by non-government employee, then it is having exemption under 10 clause 10 to certain limits. So, suppose if gratuity is received by an employee for whom payment of gratuity act applies. Suppose an employee is receiving gratuity where for him act is applicable, or suppose if the gratuity is received by an employee where payment of gratuity act not applicable. Now, how to calculate exemption? Now, exemption is lower of the following. How much exempted? Actual amount, how much? Because exemption cannot be more than actual. Suppose you receive 10 lakhs gratuity. How much is exempted? Maximum 10 lakhs. Statutory limit of exemption is 20 lakh, or 15 by 26 into last drawn salary into completed years of service or part thereof in excess of 6 months. What does it mean? Suppose if an employee completed 30 years 7 months, it is treated as 31 years. If an employee completed 30 years 5 months only, it is treated as 30 years only. So if at all an employee who has completed an year, who has completed more than 6 months in a year, it is treated as full year. Otherwise, it is treated as no year at all. Getting it? Now, at the time of retirement, what is last drawn salary? At the time of retirement, what is your salary? So that is called last drawn salary. Now, sir, salary means what? You are saying salary includes so many. What are they? Here, for the purpose of gratuity, where gratuity act is applicable, basic plus DA basic plus dearness elements. Here, any DA you may consider. Salary means that. So, take what is the last drawn monthly salary. Last drawn monthly basic salary, how much? Dearness elements, any DA, retirement, non-retirement, doesn't matter. Now, multiply with 15 by 26. 15 by 26 into basic plus DA, any DA of that last month. Multiply by how many years he completed, or more than 6 months if at all he completed any other year. That also you take it as full year. So, that you apply, you get some amount. Now, among these three, lowest amount is exempt. So, employee received something, exemption is something, balance amount is taxed as salary under 17 subsection 1. This is gratuity where act is applicable. Now you see, sir, I told no, salary means this. In this salaries chapter, we have mainly 3 salary definitions. 3 definitions for salary. Suppose, if at all the word salary is used for exemption under gratuity, when you are calculating exemption under gratuity, where gratuity act is applicable, they have given 3 criteria. One of the criteria is what? 15 by 26 multiplied by last drawn salary. What does it mean? Salary at the time of retirement. Salary means what? Basic plus any dearness elements plus nothing. So basic plus any dear. So that is what salary at the time of retirement. Now here in while calculating gratuity exemption where act is applicable, they have used the word salary, right? Salary means this. Now same way the word salary has been used at various locations. Recognized provident fund, employer is contributing to RPF in excess of 12% of salary is taxable, beyond 12% of salary is taxable. Now 12% of salary means what? Salary means what? Basic plus DA for retirement plus commission, only percentage of turnover. Fixed commission you should not take. Here DA only if it is for retirement benefits you should take, other DA you should not take. Getting the point? Now this salary definition is applied at 5 places: RPF, HRA, gratuity, leave encashment, voluntary retirement compensation. In all these 5 cases, in all these clauses, in all these exemptions, if the word salary is used, salary means these 3 components. Suppose if it is used for gratuity where act is applicable, this one. Suppose if it is for gratuity where act is not applicable, an employee received gratuity at the time of retirement, but for him gratuity act do not apply, still he received gratuity. Now for him, how to calculate exemption? They have given a criteria. In that criteria, the word salary has been used. In fact, average salary word is used. Salary means what? This one. Now suppose employee was given rent-free accommodation facility. Now accommodation facility, the company gave any accommodation to employee, so how much is benefit value? Perquisite valuation rule says some percentage of salary. Salary means what? Basic plus DA for retirement plus any commission, bonus, taxable portion of allowances. Actually for RFA, if you see original salary definition given in the book, it is very comprehensive, very big, that if you convert it into a particular meaning as a formula, this is the definition. If you apply this formula, I am telling you, you will get absolutely correct answer. So basic salary. So while you are computing accommodation benefit, salary means these components you take. Anyhow, when I am discussing that, I will once again come back and show you what are all this. So I am just giving you a brief idea. Getting it? So by the way, if at all any of you are looking for these 3 points, you can take a note of it, or alternatively, you download Sreshta for CACMA application. You download Sreshta for CACMA application. Just a minute. You download Sreshta for CACMA application. So just a minute, sorry. So inside that there is a course called Group 1. Open this Group 1. So inside this content, November 23. Getting it? So inside this P4 taxation is there. P4A taxation is there. Inside the salaries chapter is there. Inside this you can download salaries overview file, accommodation facility. These 2 PDFs are unlocked. You can download this. Getting it? So anyhow, so that's it. Now let's continue with the gratuity. So if an employee who is receiving gratuity where he is covered under Gratuity Act, which of these three items were the right? Least of them is exempted. Suppose if an employee is receiving gratuity but he is not covered under Gratuity Act, how much is exempted? Actual 20 lakh, 15 by 30, nothing but half a month salary multiplied by average salary multiplied by completed years of service only. More than 6 months point is not there. Suppose if an employee completed 30 years, 11 months, 10 days, we still consider it as 30 only. Sir, 11 months extra he worked? No, we don't consider. So only completed years we look into. Multiplied by average salary. Salary means what? Basic plus DA for retirement plus commission as a percentage of turnover. Now that salary you should take. Which salary? Average you should take. Average of how many months? Last 10 months preceding the month in which employee retired. So in which month employee retired? Check out. Before that, last 10 months, basic total it. DA for retirement total it. Commission as a percentage of turnover, whatever is there in the last 10 months, total it. Divide it with 10. You will get average salary. So that amount you keep it here. Now 1 by 2 into average salary into completed years of service. So this is what treated as, third criteria. So among these 3, whichever is lower, that much is exempted from the gratuity received by the employee. So first, what is amount received minus these 3, whichever is lower, that is exempted. Are you clear? Don't worry, at the end of this video you will find once theory concept provision discussion is over, you will find problem solving also. So don't worry. So most of the adjustments, most of the provisions whatever we are discussing, we have solved it in the form of problems. Next up. Now so this is regarding gratuity. Over. Now in this they have given certain points. This 20 lakhs is lifetime limit. Suppose if an employee is getting gratuity from 2 or 3 employers, from all the employers put together, exemption cannot exceed 20 lakhs. Next. So what is the next benefit? So now right now we have covered gratuity point. We have covered gratuity. So whatever I have covered now, I will highlight it with green color. So now let's continue. Pension. So how to understand pension? How to calculate pension value? Now the pension is of two types. Generally pension is received at the time of retirement or after retirement you will receive. Pension that you receive generally monthly. That's called uncommuted pension. What is it called as? Uncommuted. Suppose you may also receive in lump sum. That is called commuted pension. Suppose after you retire, no, company offered you 15,000 rupees monthly pension. Okay, they offered you 15,000 rupees monthly pension, 15,000 they offered you. Alternatively, you can take 15 lakh lump sum also. They told you these two options. You can take 15 lakhs lump sum or take 15,000 monthly pension. What you did, sir, you give me 5,000 rupees monthly, 10 lakhs I will take lump sum. You gave this option called, sir, I will take 10 lakhs lump sum, sir. 5 lakhs I don't want. Instead of that 5,000 you give me monthly. You told this proposal to the company agreed. Now you are getting monthly how much? 5,000. Whatever number of months were there in that year, that is fully taxable. Whether the employee is a government employee or non-government employee, monthly pension received is fully taxable. Now you are receiving lump sum. What about this? There is a section 10 clause 10A. There is a 10 subsection 10A, they refer it as, but it's actually clause 10 clause 10A. So this clause says lump sum pension received is exempted as per below. How much is exempted? Suppose if the employee is receiving gratuity, he is receiving gratuity, claiming exemption also for the gratuity, then how much is exempted? 1/3 of full pension value. Whatever full pension value is there, in that 1/3 is exempted. So how much amount received? Check out. Minus 1/3 of full pension value is exempt. Now full pension value, how to calculate? In this case you see, monthly he is getting 15 originally, but he only took 5,000. How much he sacrificed? 2/3 of the monthly pension he sacrificed. Monthly he is getting 15,000, but he is only receiving 5,000. 10,000 he sacrificed. So in 15,000, 10,000 proportion is what? 2/3 he sacrificed. For sacrificing 2/3, lump sum how much is getting? 10 lakh. Now for 2/3, lump sum amount is 10 lakhs. For full amount how much? So 10 lakhs is for 2/3. So it is for 2 portion. So which means 3 portion means what? Full value is 15 lakh. 15 into 1/3 how much? 5 lakh. Employee received how much pension? 10 lakh in our example. How much is exempt? 5. So 5 lakh is taxable. If you want, once repeat this video, last 5 minutes once again. If at all you did not understand, just repeat this video. So in exam they'll give you employee commuted 60% of the pension for 3 lakh. Employee commuted 40% for 2 lakh. Employee commuted 70% of the pension for 5 lakh. How to identify full value? How much amount received divided by what is the commutation percentage? Apply. You will get full value. On that full value, how much is exempted? 1/3. That is exempted value. Exempted value you should reduce from which value? Full value. No. You should reduce exempted value from pension received in lump sum. Suppose if the employee is not receiving gratuity, then how much he received pension? Identify lump sum. In our example, 10 lakhs received. Now how much is exempt? Half of full pension value. Full pension value is 15 lakhs in our question. So half of full pension value means 7.5 lakh is exempt. So 10 lakhs he received, 7.5 exempt, 2.5 lakh is taxable. And remember, if commuted pension is received by a government employee, it is fully exempt. Commuted pension received by non-government employee, then it is exempted as per the below. If he is receiving gratuity, then how much lump sum pension he received? Put it. Minus 1/3 of full value, full pension value, commuted value they'll give, no, divided by how much percentage the commuted. Check out, apply that. You will get full value. So 1/3 into full value amount you will get. That you reduce from amount received from lump sum. Taxable amount you get. Same way, half of full pension value. If the employee is not receiving gratuity, then from the total pension received lump sum minus half of full pension value is exempt. That's it. So this is related to pension. I hope you are clear now. So I discussed both. What is uncommuted? That pension which you are receiving monthly without any commutation. Commutation means transfer of right. Getting it? Now commuted pension. Commuted means what? Lump sum pension. Further we have 10 clause 10A exemption. For government employee it's fully exempt. For non-government just now we discussed. Then we have something called leave encashment. What is meant by leave encashment? What is meant by leave encashment? Very simple. Every year company is giving me some 40 or 50 days leave. Every year I can take these many leaves. 20-30 years I worked in this company. 20 years I worked in this company. So every year 40 days I can take. 20 into 40, 800 leaves I can take. But you know what? I only took 400 leaves. 400 leaves company extra gave me, but I didn't use. Now these 400 days I told company, please give me cash now. I came and worked now. Even though you gave leave, I came and worked now. So you give me cash for that 400 leaves. So company gave me. So what I did, whatever leave I have, no, accumulated leave, I encashed it. That's called leave encashment. That's called salary for the leave period. That's called leave salary. So if an employee is receiving leave salary, government employee fully exempt, non-government employee under 10 clause AA, 10 clause 10 AA, under this leave encashment is exempted to the extent of least of the following. So actual amount, one criteria, 3 lakh, 10 months multiplied by average salary, then you know, how much is unutilized leave? Unutilized leave identify. Unutilized leave identify. Divided by 30. Multiplied by average salary. This much. Out of these 4 categories, whichever is lower, that is exempt. Now, what do you mean by, how do you calculate unutilized leave? How do you calculate this unutilized leave? First of all, leaves granted per annum by the company are 30 days per annum, whichever is lower. This you calculate per annum, multiplied by completed years of service. Part thereof in excess of 6 months, don't consider. So, leaves per annum, how much? Or 30 days per annum, whichever is lower. If company is giving 40 days leave every year, 30 days only we should consider every year. So, 30 or 40, whichever is lower. So, 30 into complete year 30. So, total you are eligible for 900. How many? This is a total leave availed minus total leave available minus you already availed, means utilized 400 leaves, means 500 is unutilized leave. So for 500, so for 30 days this much is the average salary. For 30 days this much is the average salary. For unutilized leave, how much? This much is exempt. Are you getting it? So in these 4, whichever is lower is exempt. So 10 months into average salary, one criteria. Unutilized leave divided by 30 multiplied by average salary is another criteria. How to calculate this unutilized leave? Very simple. Total leave minus utilized leave, unutilized leave. Total leave, how you should calculate? How many years you worked in this company multiplied by how many leaves you are eligible in a year. If you are eligible in a year more than 30 days leave, then take 30. If you are eligible every year less than 30, then take actual leave per year into total years. Is minus leave utilized by you during this 30 years, then you will get unutilized leave. For 30 days you are getting this much average salary. For unutilized leave, how much? That is 4th criteria. Listen to the past 5 minutes once again, you will get clarity. Most of the students at CA Inter do wrong in leave encashment problems. The reason is they don't understand the 4th criteria. Up to 3rd criteria everybody will do correct. These 3 criteria, everybody will do correct answer. 4th criteria, many will do mistake. Why they do mistake is they don't understand the concept of unutilized leave. How to compute unutilized leave, they don't understand. How to compute unutilized leave? Total leave minus utilized leave. Utilized leave, they'll give you in the problem, always. Getting it? Total leave, how to calculate? Actual leave per annum available or 30 days per annum, whichever is lower, multiplied by number of years employee completed service is equal to total leave. Minus utilized leave, they will give in the problem. You will get unutilized leave. Divided by 30, multiplied by average salary over 4th criteria. Among these 4, whichever is lower, that much is exempt. So how much you receive? 10 lakhs. Here you calculated lowest value, 2 lakhs you got. So 2 lakhs, 8 lakhs is taxable. That's it. You clear. So that's leave encashment. Now here also they have used the word salary. What do you mean by salary? Salary means basic plus DA for retirement plus commission percentage of turnover. So gratuity where act is applicable, basic plus any DA. Gratuity where act is not applicable, basic plus DA for retirement plus commission percentage of turnover. Leave encashment, basic plus DA for retirement plus commission percentage of turnover. Are you clear? Getting it? By the way, whatever I am explaining, that and all were there. You see here, directly I'll go to, gratuity point. So here it is, pension point is given, pension point is given here itself. Pension, this is our main book. You can download this book in Shrestha application or even on the website. You go to website shrestha.cacma.com, there you can download. So pension, commuted pension, uncommuted pension, both I have given. We have even given an illustration. You can solve this illustration. I'm telling you, if at all you solve our book, whatever illustrations we have given in our book, by the way, you can even download the workbook like this. We have a workbook like this also. If you just download this workbook from our website also, if you solve this workbook completely, I'm telling you 99.99% questions will be from this workbook only. Just numbers will be changed. That's it. All the adjustments that are going to be asked in exam, all are covered here. So pension point here I have given entire thing, whatever I have told. Gratuity point, government employees exempt, defense people exempt, other employees non-government, act is applicable, I have already told. Act is not applicable, I have told. What do you mean by salary when act is not applicable? What do you mean by salary when act is applicable? Everything I have covered. Then we also covered right now leave encashment, leave salary. For government employee is fully exempt. For non-government employee, 4 categories we have, 4 criteria. So how much you receive? Minus out of these 4, least amount, that much is exempt. So salary means what? I have already told. That's it. So which means leave encashment is also completed. Now leave encashment, pension, monthly pension, uncommuted, gratuity, all these are taxable under 17 subsection 1 as part of salary. Now voluntary retirement compensation, what is it? VRS. VRS is taxable as profit in lieu of salary. Of course, at the end of the day it is taxable, but how it is taxed? Gratuity, pension, leave encashment, these are taxed as salary, whereas this is taxed as profit in lieu of salary. So now, public sector companies or private sector companies or private companies or some governmental organizations, only they are eligible to give VRS. If they are giving any VRS compensation to employee, getting it as under a scheme of voluntary retirement, company want to reduce the staff. Overall staff of the company should reduce. And if an employee in a scheme of VRS program receiving compensation from the company for voluntary retirement, and this employee has completed 10 years of service or has 40 years of age, then this person is eligible to get exemption under 1010C. Suppose if an employee who has not completed 10 years of service, if this fellow is getting VRS, fully taxable, no exemption. If an employee completed 10 years of service and receiving VRS under a scheme of VRS, approved scheme of VRS, then 1010C exemption is available. How much is exempted for VRS? Very simple. Actual amount 5 lakh only. Just a minute, sorry. There's so many limits now. So sometimes 5 lakhs or 3 lakhs or some amount is there. Just a minute, it is there in profit in lieu of salary. Sorry, it is there in profit in lieu of salary. Correct only, always. Just confirmation, 5 lakhs only. 3 lakhs limit is only for leave encashment. In all other cases, it is either 5 lakhs or 20 lakhs. Okay, fine. So 5 lakhs or 3 months into average salary. Yes or no? 3 months of salary for 3 months of salary for each completed year. For how many completed years is there? Into 3 months of salary. Salary means last on salary. That's enough. Third criteria, salary at the time of retirement are nothing but salary multiplied by number of months service left. If at all you are not retiring, how many more months you can service for the company? That many months multiplied by last on salary. That is one criteria. Second criteria is what? 3 into completed years of service into salary. Last on salary. Salary means what? For VRS, basic plus DA for retirement plus commission percentage of turnover. Then actual amount or 3 lakh or this one 3 into completed years into last one salary. Fourth criteria, number of months service left multiplied by salary. Salary means what? Basic plus DA for retirement plus commission. So find out these four criteria, whichever is lower, that much is exempted for under VRS 1010C. That's it. So with this, we have even completed, retirement benefit. Now all the retirement benefits that generally be asked in exam, we have completed. No more retirement benefit. That's it. Now let's discuss, monetary benefits which an employee will get. Suppose in the question they are giving you basic salary, fully taxable, DA for retirement, fully taxable, DA, normally they said, nothing is mentioned. They just said DNS elements, nothing they spoke. That's a normal DA, not for retirement, fully taxable. Bonus is taxable, commission is taxable, fixed commission is taxable. Transport elements. Now, what is this transport elements? Getting it? Just a minute. So, transport elements. So there is something called transport elements. Transport elements. Suppose if transport elements is given to a blind, deaf, dumb, or orthopedically handicapped. To these people, if an employee who is a blind, deaf, dumb, or orthopedically, nothing but physically handicapped person in lower extremities of the body, for him, if at all we give any transport elements. What is transport elements? For coming from home to office, then returning to home, nothing but for commutation between home and office. For that purpose, companies even transport elements. Then up to 3,200 is exempt. Whether the employee is choosing 115 BAC or not, he may be choosing optional tax regime, he may not be choosing optional tax regime. Irrespective of that, up to 3,200 worth of transport elements received by him is exempted. Suppose if transport allowance is given to a person working in transport sector, he is working in transport of passenger or transport of goods. So I am working in a transport company. I am receiving transport allowance. How much is exempt? 70% of allowance received. 70% of allowance received is exempt, but maximum exemption is 10,000 per month. Suppose if company is paying me 10,000 monthly, exactly. Let us assume company is paying 10,000 monthly and the person is working in transport sector. How much is exempt? Entire pen exempt. Wrong. Students do this mistake. If at all you are receiving 10,000, you are receiving 10,000 transport allowance every month and you are working in transport sector. How much is exempt? 70%. That is equal to 7,000 or 10,000, whichever is lower. 7,000 only exempted. So if an employee working in transport sector, if he is receiving transport allowance, how much is exempt? 70% of the allowance received or 10,000, whichever is lower. That much only exempt. In addition to this, company may give transport facility. Getting the point? Transport facility means what? Company itself is arranging bus for the employee to come from home to office, office to home. Fully exempt. Fully exempt. Transport facility is fully exempt. Able to understand? Suppose if the company is giving a transport facility for employee tour purpose, employee is going on a tour for personal reason, vacation, for that company is giving transport facility, whatever market value is it, that much is perquisite. If it is given in railway, whatever the railway fare is, that is perquisite. If at all, if it is given in airway, airway is the perquisite. Able to understand? If it is for personal reason. But anyhow, transport facility point is not at all important from exam point of view. Therefore, right now what we have completed regarding transport, we have completed transport allowance point. I hope now you understood. Transport allowance is understood. Transport facility also we have completed. So whatever we have highlighted in green, we completed. Now next, children education allowance. Children education allowance. What is this? You know, an employee, he may give either education allowance, or employer may give education facility. Employer may give education facility. Suppose if education facility is given to children of the employee, if the education facility means what? Employer is having a school or employee had tied up with our particular school. In that school, only this employer children, only this company employees, their children only will join in that school because the employer company has a tie up with that school. Now in that school, employee joined his children's. Getting the point? Now that entire cost of education employer is only bearing. Getting it? It is not reimbursement. Employer is only bearing it completely. The facility itself, you told employee go and join your children in that school, or we have our own school. So I told employees to join their children in our school itself. Education facility. Now what is the perquisite? If cost of what is it? If cost of education in similar institute is less than or equal to 1,000 rupees per month, then it is fully exempt. If cost of education in a similar school is exceeding 1,000, it is fully taxable. Fully taxable. What do you mean by fully taxable? Exceeding 1,000? No. Suppose my employee, I am working in a company. My children, I joined an employer school. That's an international school. Similar education cost is 20,000 per month. Entire 20 is taxable because the cost of education per month exceeds 1,000. Therefore, entirely taxable. Sir, 1,000 exceeding means only 19,000 you can tax monthly. Why entire 10? Why entire 20 you are taxing? Because this 1,000 rupees is a threshold limit. This is not a slab limit. What they said, they only talk about exemption. What they told, if cost of education in similar institution does not exceed 1,000, it is exempt. What does it mean? If it exceeds 1,000, fully taxable. Alternatively, many others, what they are doing is up to 1,000 they are claiming exemption. Excess amount facility cost they are taxing. Anyway, you can follow in exam, but you should mention alternative view as a note point compulsorily. Suppose if education facility is given for any other member of the employee, if any other person on behalf of employees is taking education facility, company is bearing cost, fully taxable. Whatever cost of education in a similar school is there, no, fully taxable. No 1,000 rupees limit also, fully taxable. Suppose company is not giving facility, we are giving allowance. We are giving allowance to employee. Allowance means what? I give some money, whether he will spend it or not, that is his choice. Allowance, education allowance is exempt up to 100 rupees per month per child, maximum 2 children. Maximum for 2 children, 100 rupees per month per child exempted. Now, suppose for one of the children, company paid 120 rupees. For another children, company paid 90 rupees allowance. Getting the point? 90 rupees only allowance company. The allowance itself is 90 rupees. Getting it? For one children, we give 120. 100 is exempt, here 90 only exempt. So 20 is taxable, here 0 is taxable. Some students, what they do is they merge these two, 210. Now up to 2 children, 100 exempt, no 200. So they only tax 10. That's wrong answer. You should calculate children wise exemption. And children wise elements taxability you should calculate. Remember, careful. So education elements, education facility, both are over. I hope you are able to recollect all the concepts. So education facility is over. Now suppose employee children are staying in hostel. For that purpose, we are giving hostel elements also. For employee children, hostel purpose, employer, company is giving some elements. It is exempted up to 300 per month per child. So per child, per month, how much is exempted? 300. Maximum for 2 children. Getting it? So hostel elements is also over. Hostel elements is also over. Next we will discuss house rent elements. What is it? House rent elements. Now look at carefully. House rent elements. So a company, whenever a company recruit an employee, companies, they generally give accommodation to employee. Accommodation is a facility. Accommodation facility means companies having staff quarters. In that quarters, one bungalow is allocated to employee. That's a facility given to employee. So that's a perquisite which is valued as per valuation rule. Alternatively, company may give rental allowance. That's called house rent allowance. What is it called as? House rent allowance. So for rental expenditure purpose, we are giving house rent allowance. Now, if house rent allowance is given, there is an exemption given for that under 10 clause 13A. How much is exempt? How much amount actually received per month? How much is rent paid in that month minus 10% of salary minus 50% of salary. If at all you are paying rent in a city, Delhi, Kolkata, Mumbai, Chennai, then 50%, or 40% of salary if at all you are paying rent in any other city. Suppose if at all you are staying in a rented accommodation, you are paying rent. That accommodation is in some other city, not Delhi, Kolkata, Mumbai, Chennai, then 40% of salary is one criteria. If at all you are staying in a rented house in Delhi, Kolkata, Mumbai, Chennai, then 50% of salary. Second criteria, how much you are paying rent monthly minus 10% of salary. Salary means what? Basic, DA for retirement, commission percentage of turnover. I told you for 5 purposes, salary means same. RPF, HRA, gratuity where act is not applicable, leave encashment, VRS. In all these 5 cases, salary means basic plus DA for retirement plus commission percentage of turnover. We already completed gratuity where act is not applicable. So one time salary we discussed, VRS we completed, leave encashment we discussed, HRA now we are discussing, RPF alone is pending, where this salary definition is applicable. Correct? I hope you are able to recollect what I am explaining. Getting it? You just listen to this carefully. You listen once again. Problems are also given. You just observe those problems. Believe me, you are done with salary chapter. So, how much is exempt? So, actual amount, how much you received? Rent paid minus 10% of salary. Suppose you have paid rent 0. For some 2 or 3 months, you did not pay rent at all. For those 3 months, you will not get HRA exemption at all. Remaining 9 months, you paid rent. For those 9 months, HRA exemption you will calculate. So if for any month you don't have rental expenditure at all, for those months, whatever HRA you received from the company is fully taxable. Remember, HRA you have to calculate month wise. If all the months you have stayed in rented house, all the months salary information is same, HRA amount is same, rent paid expenditure is same, city is same, then entire 12 months put together at a time you can calculate. Getting the point. So this is HRA computation. So actual rent paid minus 10% of salary, 50% of salary or 40% of salary as the case may be. Now salary means what? Basic, DA for retirement plus commission. Suppose, sir, we are giving an employee accommodation facility. Sir, we are giving the employee accommodation. Always remember this thumb rule in salary. Whenever you have a problem, accommodation facility is there. You need to value the perquisite. Calculate this at last. Calculate this at last. Getting it? So how to calculate income under salary? First calculate gross salary minus deductions. Then you will get income from salary. Getting it? Deductions means what? I have already told. No. Deductions. You have 3 deductions. Standard deduction, entertainment allowance, profession tax. Anyhow, we will discuss that later. So always whenever you are computing problem on salaries, accommodation related perquisite valuation, do it at last. Just before you compute gross salary total, compute accommodation perquisite. Next. So right now what is over, which means house rent allowance is over. Next, telephone allowance. You know what? If employer company gave telephone facility to employee, fully exempt, nothing is taxable. If allowance is given, allowance means what? I give money, whether he will use telephone or not doesn't matter, that is his choice. If I give telephone allowance, fully taxable. Telephone allowance is fully taxable. Are you getting it? Suppose I gave an employee medical allowance. Again, medical allowance means I have points to say. Suppose, employee for medical purpose, we are giving allowance, or we are giving reimbursement, or we are giving facility. Employer is having a hospital, medical, hospital is there. In that hospital, employee and his household member getting treatment, fully exempt. What is it? Fully exempt. Now, employee plus household member means family means what? Children, spouse, dependent parents, dependent brother or sister, only these are covered within the definition of family. If employee or his family members getting medical treatment in employer hospital, employer maintained hospital, it is fully exempt. Suppose employer is not having hospital, so employee is spending money, getting reimbursement from the company. He is spending money for medical treatment of himself and family. Family means only these people, man, remember. So for these people, he is spending money, medical expenditure, then getting reimbursement from the company. Now, this reimbursement is exempt. Only if the medical treatment is held in, if the medical treatment is taken in government hospital, or if medical treatment is for prescribed diseases given by Chief Commissioner of Income Tax or Principal Chief Commissioner of Income Tax, or if the medical treatment expenditure is for COVID illness of the employee or family member. For these purpose, he spends some medical expenditure, company is reimbursing, then only exempt. Suppose if employee or family member, they are getting medical treatment in a private clinic, they are getting medical treatment in a nursing home, they are getting medical treatment somewhere in a family doctor, and employer is reimbursing it, fully taxed. Suppose employee suffering from some particular problem, he went abroad. For that, he went abroad and took medical treatment. For that medical treatment, company already reimbursed. Now, to travel abroad, travel expenditure also company paid. Now, in abroad, they stayed for some number of days. Stay expenses also company paid. So, if employee who has taken medical treatment outside India, treatment costs, traveling costs, boarding and lodging costs, completely company only, reimbursed. Now, what about that? Medical treatment abroad, it is exempted to the extent exempted by RBI. Whatever RBI allowed, to that extent, whatever employer reimbursed, exempted. Suppose the employee spent 10 lakhs expenditure, entire 10 lakhs company gave, but RBI gave 9 lakhs only permit, 1 lakh is taxable. Now, on transport, travel expenditure 5 lakhs employee spent, company reimbursed entire 5, but RBI gave 4 lakhs only limit, then 1 lakh taxable. Further, for travel expenditure, abroad travel for medical treatment, that is exempted only to the extent of RBI. That to this exemption, when if gross total income of the employee does not exceed 2 lakhs. If employee gross total income is less than or equal to 2 lakhs, then only this travel expenditure is exempted, which is reimbursed by the company. You getting the point? How to identify gross total income? Compute income from salary. All perquisites, allowances, everything, even medical reimbursement, taxable items, everything, even medical treatment at abroad, taxable portion is there, add it, everything you total, except this 5 lakhs, except 5 lakhs of travel reimbursement, rest everything you total, taxable items. Identify income from salary, identify other heads, gross total income, if it is less than or equal to 2 lakh, then travel reimbursement for abroad medical treatment is exempted, otherwise it is fully taxable. Be able to understand. Now, travel reimbursement for employee or the family member who is suffering illness plus one attendant, for them only company will give, that is only exempted. Suppose I am giving monthly some fixed allowance, I am giving some monthly some amount, whether he will spend it or not doesn't matter. Allowance is fully taxable. Reimbursement is exempt only if it is in a government hospital, prescribed disease, COVID, treatment at abroad to the extent permitted by RBI, travel and stay expenses to the extent permitted by RBI is exempted, provided gross total income do not exceed 2 lakh. Over. Suppose if on employee and family members' name, company took a medical policy, company is paying premium, fully exempt. Suppose employee only purchased medical policy, he is paying premium, I am reimbursing it, fully exempt. Allowance of medical allowance is fully taxable, please remember. That's it. So, So medical reimbursement we discussed. Medical elements we discussed. Yes or no? We have covered medical elements and medical reimbursement, all that. Just a minute, I think something is missing here. Here you see. Here, let me copy this page. Copy the page. I will paste it below that. I will paste it below that. So paste page. Yes, continuation. That's it. So we have even completed what? We have completed what? Medical policy on the employee. It is fully exempt. Suppose company has taken accident insurance policy. Accident insurance policy on the employee name. Fully exempted. Able to understand? Next. Suppose company is offering lunch. Getting it? If at all company is giving allowance, money is given to by the company to employee. Employer gave lunch allowance, fully taxable. Suppose company is having a food court. To the employee, I give a lunch voucher. He can use that voucher and to buy the food only. See, if I give allowance, whether he will spend or not, I don't know. I gave money, monthly some amount I gave for lunch purpose or tiffin purpose, whatever. Some allowance I gave for food and beverages, fully taxable. Suppose if I give him voucher, he cannot use it anywhere else. He can only use it for food redemption. If I give a voucher, lunch voucher, up to 50 rupees per meal is exempted. Getting it? That's it. So lunch facility, if I give lunch facility by voucher, up to 50 rupees per meal is exempted. Gift. Suppose employee did something well in this month. So company want to give a gift to him to reward his service. So we gave a gift. Cash we gave, fully taxable. Suppose you gave a voucher or kind, some non-monetary thing you gave. If the value is not exceeding 5,000, fully exempt. In the entire year, if the value is not exceeding 5,000, fully exempt. If the value is exceeding 5,000, fully taxable. Alternative treatment, up to 5,000 exempt. Beyond that, whatever the value of the gift is, that is taxable. So gift allowance, gift in kind. So gift in kind I did not write here. So gift allowance. So gift allowance is taxable. So here you add one more point. Gift in kind. So that also we have covered. Yes or no? Understood or not? I hope you are able to recollect these many points you have studied in this one. Next. Contribution to RPF in excess of 12%. Interest on RPF in excess of 9.5. What does it mean? Suppose employer is contributing monthly to recognized provident fund in the name of employee. Employee is also contributing out of his salary to provident fund. For him, it's a ATC deduction. Now, company is contributing in your name for your future benefit. That's a benefit for you, right? So, if company is contributing for your future, some amount to the provident fund authorities. How much? If it is up to 12% of salary, company contributed, fully exempt. If it is beyond 12% of salary, that excess amount over and about 12% of salary, if employer is contributing in the name of employee to the provident fund authorities in excess of 12% of salary, fully taxable. 12% of salary means what? Salary means what? Basic. DA for retirement, commission percentage of turnover. So in reality, in problem, what they will tell you is employer contributed 20% of basic to RPF. Employer contributed 15% of salary to RPF. Like that, they'll give you. First, how much he contributed? Money. Convert it into money first. From that, reduce 12% of salary. Identify salary, basic, DA for retirement, commission percentage. Identify the problem, amounts. Apply 12%. Value identify. How much value amount contributed? How much amount exempted? Balance, if at all positive, tax it. Otherwise, exempted. Able to understand. Some students know what they do is in exam they'll give you employer contributed 20% of basic salary to PF. Directly this fellow will do 8% tax. 8% he will tax it directly because 12% exempted. You should not do like that. You will get a wrong answer if you do. Always take a working note. How? Actual amount contributed, how much? Identify. 20% of basic. Basic is what? Check out. 20 apply. Amount you put. Minus 12% of salary. Salary means what? Basic. DA for retirement. Commission percentage of turnover. Amount. Total it. Getting it? Apply 12%. Value you will get. Amount contributed 10 lakh. Value 9 lakh. 1 lakh is taxable. You should always compute like this in a working note. Only then you will get marks. Now, so in excess of 12% of salary, exceeding 12% of salary, if any contribution is there, only that is taxable. Same way, in that RPF, company will be adding interest every year. If the interest rate is 9.5% per annum, that interest is exempted. If the interest is more than 9.5% per annum, suppose if company is paying 13% interest, then 3.5% interest is taxable. They'll give you interest amount. So 14% interest is equal to 14,000 rupees. Now 9.5 means how much? 9,500. So 4,500 is perquisite. 4,500 is salary, not a perquisite, salary, taxable. Next, leave travel concession. What is leave travel concession? This is if an employee and along with family, personal reason, they are going for a journey, they are going for a holiday in a block of 4 years. What is it? In a block of 4 years, 2022 to 2025. Right now, the ongoing block is this one, 22 to 25. This provision is added in 1986. So 1986, 87, 88, 89. That is one block. 1991, 92, 93, one block. 94, 95, 96, 97, one block. Like that, right now, what is a block? 2022, 2023, 2024, 2025. This is the block. Sir, financial year, calendar year. Calendar year. In this 4 calendar years, if you go for 2 holiday trips, you and your family means what? Spouse and children. Children means how many? 2 children. Getting the point? 2 children. 2 children means what? 2 children only. Suppose if at all twins were born or triplets were born. Getting it? First time employee has been blessed with 1 boy. Second time he was blessed with 2 boys at a time, twins. They are treated as 2 children only. Now, this employee went for a holiday trip. The entire trip cost, not staying and lodging, only travel cost, company reimbursed fully. Entire travel expenditure which employee went on leave travel, that entire travel expenditure company only paid for the journey. Entire amount is exempted. Entire amount of leave travel is exempted, provided the leave travel must be within India, not outside India. So within leave, if any leave travel facility is taken by employee within India, whatever travel expenditure company is bearing, that is fully exempt. Now, how many holidays employee can take? 2 holidays, 2 journeys. What is it? 2 journeys it is exempted. 2 journeys every year? No. In a block of 4 calendar years, 2 holiday trips employee can take up. 2 holiday trips, whatever traveling cost is it, that is exempted in a block of 4 years. Sir, suppose there is one block, 22, 23, 24, 25. In these 4 years, I did not went any place at all. No leave travel benefit I taken. Now what to do? Can I carry forward 2 into the next block, 26, 27, 28, 29? In this next block, can I carry forward 2? No. If at all an employee did not utilize leave travel benefit under 10 clause 5, in a block, he didn't use at all. One leave benefit, 1 holiday can be carried forwarded to next block. Accordingly, in the next block, 3 leaves he can use. 3 holidays he can use, provided the carry forwarded that should be used within the first year in the next block. Then, suppose employer my tax liability, employee tax liability, employer pay. I'm earning salary, right? On this salary I have to pay tax. This tax also company is only paying. So good, my bosses. So on the perquisite which I am getting, company is only paying salary. The salary paid by company on my salary, my tax, my income tax, they pay. It's a benefit to me now. It is taxable in my hands now, but it is exempted. It is exempted. Now, you know what? Company is paying income tax. No, my income tax. For them, it's an expenditure at the end of the day, because my expenditure they are paying. So it's a business expenditure, but they cannot claim deduction under 40 subsection A, clear disallowance point. If a company, if any tax is paid on non-monetary perquisite given to an employee, the tax paid is not allowed as deduction for the employer who is a business person. Under PGBP, he will not get deduction. For me, under salary, is it taxable? No. Almost 1 hour. All these points I've covered. Still, we have few more points. If at all we discuss these points, I'm telling you, majority of the salary provisions we have covered. Next. Okay, already gift in kind is there, ma. Sorry, I wrote here. Gift in kind is there. Next. There are some facilities like what? Medical facility, which I already told you, telephone facility, servant facility, gas and water facility. By the way, telephone facility is fully exempt. Medical facility already discussed. Facilities, they are taxable only for specified employees. Perquisites, no. Perquisites are 2 types. Reimbursement facilities. Reimbursements are always taxable for every employee. If at all any exemption is there, that exemption apply. Generally, most of the reimbursements are fully taxable. Facilities, no. They are taxable only for specified employee. Specified employee means what? If an employee is a director in a company, he is a specified employee. If an employee is having more than 20% ownership in the company, more than 20% profit sharing ratio in the employer business, is a specified employee. If an employee monetary salary, what is it? Monetary salary amount is more than 50,000 per annum, is a special employee. Right now, if you apply that definition, no, right now, this definition was defined 25-30 years ago, specified employee definition. The same thing is continued even now. Now tell me, even a watchman, security guard is getting yearly 3 lakhs amount. He is a specified employee. So right now, if you apply specified employee definition, everybody is a specified employee in reality. But exam point of view, they are testing MCQs. So specified employee point they will test. So accordingly, facility, what facilities? Gas facility, servant facility, getting it? Transport facility, education facility, medical facility, telephone facility, all these are exempted. All these are, by the way, telephone facility is fully exempted, that is given specifically. So medical facility, education facility, let me highlight with red color. Medical facility, just a minute. Yeah. So medical facility we have covered already. Now, medical facility, education facility, transport facility, servant facility, gas, water, electricity facility. These facilities, no, only if a specified employee get this, it is taxable for him. If a normal employee also getting these facilities, fully exempt for him, it is not taxable. So these facilities are taxable only for specified employees. For normal employee, we won't tax it. For logic, getting it? So servant facility, how much we will tax it, by the way? Whatever servant salary company is paying, no, that is benefit in the hands of employee, that is taxable. Gas, water, electricity. If company is buying from somebody and then giving gas, water, electricity, whatever company paying them, no, that is perquisite, that is taxable. Suppose if company only manufacturing and giving it to employee, manufacturing cost is the benefit in the hands of employee, that is perquisite, over. So no, servant over, gas, water, electricity over. Then telephone facility fully exempt, not at all taxable. Then suppose if a company is giving a car to an employee. Sir, before car I will discuss mobile asset topic. Mobile asset. What is a mobile asset? What is a movable asset? Very simple. Suppose company gave furniture to the employee for usage. Since he is using furniture, so no, it's a benefit to the employee. How much is the value of the benefit that is taxable? How much is the value of the benefit that is taxable? The value of benefit of furniture given to an employee, nothing but movable asset. Suppose if the company is giving movable asset for usage, movable asset for usage. So company is giving movable asset for usage of the employee. How much is the perquisite? 10% per annum of original cost. Suppose if the asset is owned by the company. Suppose company purchases some asset. That asset is given to employee for usage, for personal purpose. What is the benefit value? How much is the benefit employee is getting because of using it? 10% per annum is the benefit. Suppose if the employee is using it only for 6 months, he has taken that facility, then 10% per annum into 6 months into original cost. So for how many months he is using that facility, enjoying that facility, only for that many months only, movable asset perquisite we calculate. Suppose company is taking the asset on rent, giving it to employee. Suppose company has taken AC on rent and installed it in employee house. AC rent itself is perquisite. So rental expenditure is perquisite. Rental expenditure is treated as a perquisite. See, at the end of this entire chapter, I will give one summary. Like what are all these points? I'll give common sense based summary. If you listen to that, that's enough. Suppose for employee, I gave laptop and computer for usage, fully exempt. If the mobile asset is laptop and computer which is given for employee, whether for official, personal, doesn't matter, fully exempt. If any other asset is given for employee usage, mobile asset, 10% per annum of the original cost if it is one asset. Rental expenditure incurred by the employer, if at all it is rented and then given to employee. Suppose company purchased some asset. That asset is sold to employee. Movable asset is sold to employee. On this I have explained the problem already. In that problem also, once again I repeated the provision. Movable asset I sold to employee. Suppose if a company is selling immovable asset to employee, that's a transfer of capital asset, capital gains will apply. If I give movable asset to employee, in the course of employment he purchased the movable asset from the company. Suppose employee has purchased computers and electronic items from the company. Okay, for company, company originally purchased at 1 lakh, whereas now employee paid 10,000 rupees and purchased it. Now 90,000 rupees discount, that's a benefit. Oh, you should not calculate like this the benefit. Perquisite valuation rule says for computer and electronics, company has to claim notional. Now, some asset belonging to the company I purchased. Is there any benefit in this purchase derived by me? How to calculate this benefit? Look at original cost of the asset minus claim notional depreciation. Reduce notional depreciation for every completed year of usage. For every completed year of usage by the company. So for how many years company used that asset in their own name? For how many years that asset is in the name of the company? For completed years of usage by the company. In case of in case of computers and electronic items, 50% WDV basis, we claim notional depreciation. So 3 completed years. Company purchased the computer on 1st May 2019. This employee purchased. When company purchased, just a minute. When company purchased the computer, 1st May 2019, company purchased the computer. What price? 1 lakh. Getting it? Now the employee purchased this computer from the company on 10th June 2022. Employee purchased. At what price? He just paid 10,000 rupees and bought. Or let's assume he paid 1,000 rupees only. 1,000 rupees he paid and purchased this computer. Now, is employee got any benefit in this? Let's check out. 1 lakh is the original cost, right? Now, since the item is a computer and electronic item, notional depreciation as per perquisite valuation rule is 50% WDV basis. Suppose if it is car, 20% WDV basis. If it is any other asset which is sold by company to employee, 10% SLM basis. These are the valuation rules. Notional depreciation valuation rules. 1 lakh. Now, first of all, now company purchased it on 1st May 2019 and sold to employee on 10th June, which means the gap, who is the owner? Company only owner. For how many years company is owner? From 1st May 2019 to 10th June, it is more than 3 years. Exactly speaking, 3 years, 2 months approximately. Now, how many completed years company is owner? Only 3 completed years only company is owner. Only for completed years of ownership. Only for that claim notional depreciation. So 1 lakh minus 50%, you will get 50,000. Minus again 50%. This is for first year. This is for second year. 25,000. Again claim depreciation for third year. 12,500. 50%. So what is the value? 12,500. So value of the asset is 12,500. Company employee paid how much? 1,000 rupees he paid and got 12,500 worth of asset. 11,500 is taxed as perquisite. 11,500 rupees is treated as perquisite in the hands of employee. Suppose if it is motor car, then instead of 50%, we will calculate 20%, 20%, 20%. If it is any other asset, SLM 10%. SLM basis means what? On original cost, we will calculate 10%, 10%, 10%, 3 years. So when a company sells any asset, mobile asset to employee, certain price or zero, free price, whatever, what is the value of the movable asset? How to arrive the value of the asset given to employee? Very simple. Computer and electronic items, 50% on WDV basis reduced for every completed year of ownership with the company. I hope I am giving you clarity. By the way, I have given problems also. If you look at these problems, I'm telling you most of these adjustments I've covered in these problems. Getting it? So movable asset, usage, everything, sale, both are completed. Just a minute. Yes, that's it. Now let's continue with motor car. So suppose company is giving car facility. Car facility is taxable only for specified employees. First of all, facility. Now how to tax car facility? Very simple. Very simple. Suppose now, car facility, cars are divided broadly into 2 categories. Less than 1.6 cc, more than or equal to, not exceeding 1.6 cc, more than 1.6 cc. Getting it? So, if the cc is up to 1,600, then perquisite value is different. If the cc is more than 1,600, the perquisite value is different, exceeding 1,600. Now, suppose company gave car facility. Company only owns the car. Employer owns the car. Company owns the car. The expenses of the car, they are also employer only bearing. Suppose if this car is completely for official purpose. If the car is completely for official purpose, No benefit to employee. What is the perquisite value? What is the taxable value? Zero. Suppose if it is for personal purpose. Now company gave car, expenses also they are only bearing. Now car, no, company car I'm using, no, use of movable asset. So use of movable asset, what is the perquisite? 10% per annum for using the car. Less. Expenses of the car company only bearing, no, actual expenses. That itself both put together is taxable in the hands of employee. So actual expenses means what? Fuel, maintenance, repair, driver salary, everything. Company is only paying everything. And remember, this entire car is completely for personal purpose only. So whatever actual expenses company spent, no, that is for employee benefit, personal benefit, fully taxable. Car is company own car, 10% per annum of the original cost. Suppose company took the car on rent and gave it to employee. Rent expenditure is perquisite. Whether it is more than or less than 1.6 or more than 1.6 is, it doesn't matter. Suppose car is used for official plus personal. Both the purposes employee is using. Now I cannot tax full benefit. No. How much? Perquisite valuation rule says if the car is owned by company or rented, whatever, company is providing the car. Company is providing the car. If it is completely personal, we have seen. If it is completely official, zero perquisite. If it is completely personal, use of movable asset plus actual expenditure is perquisite. Very simple. If it is official and personal, how to value? Then if it is complete, if it is official plus personal, no. If the car capacity is less than 1600 cc, then 1800 per month is the perquisite. If the car capacity is more than 1600 cc, 2400 per month is treated as perquisite value. Suppose if company gave driver also, and the driver is also used both officially and personal, then 900 rupees is perquisite in the hands of employee. So what are they saying? If you are using car for both official and personal, car is given by company, expenses are borne by the company, but it is used for both official and personal law. So personal portion, how much we assume? We assume this much is the benefit of personal portion. Actual expenditure doesn't matter. This is deemed to be the personal portion benefit. Accordingly, this much is taxable. Over. Second part. Suppose car is employee only taking the car. His car only. Car is owned by employee. His car only. Out of his own money he bought. But expenses of the car, running and maintenance, employer, company is bearing. Suppose company is bearing the expenses, no, completely. Suppose if the car is used for complete official, perquisite is 0, 0. Completely personal, actual expenditure. Completely personal, actual expenditure. Sir, for car, a car, employee car, man, 10% per annum original, that and all don't apply. That is that when we will apply that point, the company provided the car. Here car is owned by employee. Only expenses we are giving him. Expenses are completely for personal purpose. Car expenses. Entire expenses is perquisite. Suppose here official plus personal both are there. Car owned by employee. Employee's car, that is. But expenses are given by company. Maintenance, running, everything. And this car is used for both official and personal. Then look at what is the actual expenditure. Check out. Minus. If the car capacity is less than 1600, 1800 per month, you reduce. Suppose if driver is also given 900 per month, you reduce. Balance if any is there. If balance if any is there, this is only perquisite. If balance if any is there, this is only perquisite. Suppose if it is more than 1600, then what is the actual expenditure company spent? Minus 2400 per month you reduce, minus 900 per month if driver is also given, reduce, balance only perquisite. Over. This is car. Suppose if company, suppose employee is having two-wheeler, company is only giving entire, running and maintenance cost, then actual minus 900 per month, reduce it. Balance is perquisite. That's it. Car is over. Suppose if employee is given two or more than two cars, able to understand? Any one car, we will apply this rule. Remaining cars which company gave, we will treat as if it is for completely personal purpose. That's it. So car related principle is over. Motor car related principle is over. I hope you are getting. Because I need to explain you the things. I'm explaining you. In fact, I'm not just simply reading, opening the book. I'm not reading. Suppose company is giving ESOP shares or sweat equity. So since my employee is working superbly fine, he has contributed a lot. We allotted stock options, or we allotted sweat equity shares, or we allotted preference shares or debentures. Some securities we allotted. That recognition for him. Now we allotted shares and securities. No. Whatever the market value of the shares and securities is there, that is the benefit in the hands of employee, and that is taxable. Now you see these many items we are saying taxable. No, that is gross value of perquisite. Suppose no, we recovered something from employee in return. That you reduce balance benefit only tax it. Right now, whatever I told is benefit valuation. From the benefit value, if employee repaid anything to the employer, reduce that balance only we will tax. That's common sense point. Almost we have discussed many points. Now, contribution to ATCCD. Contribution to ATCCD. Suppose if company is contributing to national pension scheme referred under ATCCD on employee name for future benefit, whatever I contribute, it is treated as salary income under 17 subsection 1, fully taxable in gross salary. Whatever employer contribution is there now, under ATCCD subsection 2, employee can take deduction under ATCCD chapter 6A. In chapter 6A marathon video, it is covered. Check out there. Then finally, suppose if company is giving accommodation facility, how to tax this perquisite? For this, I have a diagram. Just wait a minute. Now you see. So how to value accommodation facility? Suppose if a government employer, if he gave staff quarters or accommodation or bungalow to their employee, getting it? Employee and his family and all, they can stay happily in that bungalow. Now they are getting rent-free bungalow, rent-free house. Now, which means employee is getting some benefit. What is the value of the benefit so that we can tax it? How much amount we can tax it? What is the value of the benefit that we can tax it? Very simple. Whatever license fee determined by the government per month, that itself is treated as value of the house per month. Getting it? So this is taxable purpose for government employee. Suppose if the employer is not a government, non-government, and company has their own staff quarters, that quarters is given to employee for his residential purpose, then what is the value of the perquisite so that we can tax it? Suppose we have given accommodation in a city where population is more than 25 lakh, then the value of the perquisite is 15% of salary. Suppose, sir, what is salary? I'll come back, wait. Suppose if the accommodation is given in a city where population is more than 10 lakh but not exceeding 25, then perquisite is 10% of salary. Suppose if accommodation is given in any other city where population is less than 10 lakh, then perquisite value is 7.5% of salary. Suppose company don't have own premises. They rented one, they leased one premises. That amount, that premises we gave it to employee for his residential purpose. Means rented accommodation. Then what is the perquisite value? 15% of salary or actual rent, whichever is lower. Suppose company is giving accommodation to employee not in a rented premises but in a hotel. Then 24% of salary or actual amount paid to the hotel, whichever is lower, that is the benefit. We are giving a house to employee, own house we gave to employee for stay, or rented house we gave him for stay. In that we gave furniture also. Furniture is given, movable asset is given for personal use. What is the perquisite? 10% per annum of the original cost for furniture owned by the company. Or if at all furniture is hired outside, that furniture is given to employee for personal use, rental expenses. So first identify accommodation. So if accommodation is given for employee residential purpose, how to tax? This is the perquisite value. In addition to that, furniture is also given, then this is the perquisite value. Now calculate the perquisite like this. If at all employee repaid company some amount monthly, reduce that. Balance amount to benefit only, tax it. Simple. Accommodation provision over. Now what do you mean by salary? Now you see the word salary is used in these many sections while calculating taxable amount. So for accommodation, salary is used. Salary means what? Basic, DA for retirement, any commission, bonus, taxable portion of allowances. So how to apply this definition? I have added a problem also, so you can find out there. Getting it? Basic, DA, any commission, bonus, taxable portion of allowances. Whereas for RPF, in excess of 12% of salary is taxable. HRA, rent paid minus 10% of salary, 40% of salary, 50% of salary. Salary means what? Gratuity, where act is not applicable. 15 by 30, nothing but 1 by 2 into average salary. Means completed years of salary. Salaries means what? Leave encashment. 10 into average salary. Unutilized leave divided by 30 multiplied by average salary. Salary means what? BRS. 3 into completed years of service into salary. Number of months service left multiplied by salary. Salary means what? Basic. DA for retirement, commission percentage of turnover. Suppose if an employee has received gratuity and he is covered under Gratuity Act. Now 15/26 into last drawn salary into completed years of service or part thereof in excess of 6 months. Salary means what? Basic plus any DA. So whatever salary definition that is used in salaries chapter, broadly 3 definitions. For RFA, salary means apply this definition. For these 5 purposes, salary means apply this definition. For gratuity, where Gratuity Act is applicable, apply this salary definition. Be able to understand. Getting it? So that's it. With this, even accommodation facility point is also completed. With this salaries chapter, provisions we have come. Now very simple. Once again, I'll come to the overview. Getting it? So first, in salaries, how to compute. First, you should compute gross salary. How to compute gross salary? First, compute taxable salary under subsection 1. Then compute perquisite values that are taxable. How to compute perquisites? They can be reimbursement or they can be facility. How to compute taxable facility, education facility, medical facility, accommodation facility, car facility, we discussed. If at all reimbursements, fully taxable. Medical reimbursement in government hospital exempt. Medical reimbursement for specified disease, COVID disease exempt. Profit in lieu of salary, VRS, I told. Yes or no? Salary meaning basic, DA, bonus, commission, gratuity, retirement gratuity, exemption we have discussed. Leave encashment on retirement, exemption discussed. Pension on retirement we discussed. Monthly pension, fully taxable. So like this, you compute what is gross salary, compute all taxable items. Then from gross salary, we have deductions, 3 deductions, standard deductions up to 50,000. Entertainment elements. Deduction for entertainment elements is available only for government employee. First of all, if entertainment elements is there, first we will tax it. Gross salary, we will tax it as part of salary. We will tax it. We have a deduction. 1/5 of basic salary, 5,000 rupees in a year. Actual amount of elements received, whichever is lower. That is deductible. Profession tax paid. If employee is paying profession tax to the state government, whatever amount of profession tax you pay, that you can claim deduction. Suppose if profession tax is paid by employer, first treat it as income from salary under salary definition. Then the amount paid by employee, you will claim deduction under 16 again. So from gross salary, you claim this deduction, then you will get income from salary. In exam, they'll give you entire problem. They may ask you either gross salary or they may ask you income from salary. If gross salary is asked, before deductions, whatever amount is there, that is gross salary. If income from salary or taxable salary they asked, then the net salary, this is the answer. I hope you are clear. Oh my God. Almost 1.5 hours we spent just to revise the content. Okay. In reality, in my regular class, I will be taking 9 hours, 8 to 9 hours on this chapter. Only concept discussion with illustrations. Here I am giving you 1.5 hours and 1 hour problems. Hardly 2.5 hours I am finishing. That's a revision. No, it's a marathon, man. First of all, understand. It's not a detailed regular class. It's a marathon. Still, I have covered all the provisions clearly with explanation and logics. That's it. Take care. All the very best. With this, salaries is stopped. Provision is over. Now continuation. Watch problems. Solving of problem is also important. I told you the provision. Now I'm going to apply the provision in the problems. Some 5 to 6 problems I've given. You just watch these problems. Believe me, you will get complete clarity on the salaries chapter. Remember, salaries weightage is minimum 8 marks to 12 marks or even sometimes 14 marks. That straight question will come. Okay, that's it. Take care. Continue watching the problems. So let's solve the pending problems that are there in the income from salaries. Once we finish these pending questions, the salaries chapter is over. Okay. So once I solve these pending questions, then we will go through once what are all the topics that we have gone through, and accordingly we will see what are all the pending items and we will keep them whole. I told you, right? All of these points we will be discussing in advanced concepts part. Getting it in the advanced topic. And you know what? Once this is completed, the next chapter that you need to watch is total income. The next chapter is total income. And I'm telling you, in total income, nothing to discuss. It's only a problematic chapter. It's purely problems. Just 2 concepts were there. There is something called alternate minimum tax. And you remember 115 BAC, we have seen that word at many places. Optional tax regime. That we will discuss. Anyhow, don't worry. So illustration 20. Now, what are they giving? Mr. X, he retired from service. In exam, especially total income problems will be given like this. Be careful. Mr. X retired from service of Messrs. Y Limited on 31st January 2023. Okay. After completing service of 30 years and 1 month. Okay, so he has completed 30 years, complete 30 years and 1 month. So for gratuity, where payment of gratuity act is applicable, proportionate, less than 6 months, we should ignore. So completed years means only 30. He joined the company on 1st January 1993 at the age of 30 and received the following on the retirement. So the following and all he has received. What are all he has received? He received, a gratuity. He got leave encashment. He got, in a scheme of company, he was offered a car, and which he purchased on 30th January. He retired on 31st January before the retirement. Okay, so sorry. Company purchased this car. On retirement, he purchased. Getting it? That's it. You see, received the following on his retirement. So on retirement, these and all he received. So what gratuity he received, leave encashment he received, then car also purchased by him for 2 lakhs. He paid 2 lakhs for the car and then purchased. Transfer of movable asset, that and all we need to compute. Wait, we will see all that. And an amount of 3 lakhs commuted pension. Pension adjustment also there. You see, almost whatever adjustments that we discussed, concepts, majority of them are covered. And he has got a gift voucher of 6,000 on his retirement. Gift in kind voucher, whatever, exceeding 5,000, fully taxable. Colleagues gifted a television worth of 50,000 from their own. Colleagues, they gifted 50,000 worth of TV. First of all, between me and my colleagues, we are not employer and employee relationship. So if I receive any gift, from anybody, what is applicable? Not my employer, from others. Other sources applicable. In other sources, when gift is taxable, immovable, stamp duty value exceeding 50 taxable. Movable, aggregate of the movable property, fair market value exceeding 50 taxable. Now again, in gift provision, capital asset means, see, the asset which I am receiving must be capital asset. Capital asset means only 9 assets. In that, television is not there, no? So this is no tax treatment. No tax treatment for this. It is to be ignored. Fine. Following are some other information. Remember, this fellow retired on 30th January. Means in 22-23 means the relevant year, whatever they spoke about. It may be 23, 24, 21, whatever. Since they talk about 2023 January, it means they are asking question on 20-23. In this year, he worked in the company for how many months? 10 months he worked. Then he retired. Now you see. So, following, he has been drawing 20,000 basic salary, 50% DA per month. So, in the salary, 50% is DA. Getting it? Now, whether this dearness allowance, is it for retirement or not for retirement? They didn't mention anything. So, if nothing is mentioned, we assume it is not for retirement. Okay. So, from 1st April to 31st January. And he also received pension of 5,000 per month for after retirement. After retirement, he'll get a monthly pension, no? Okay, he received pension also. After commutation means what? So, some amount immediately on retirement date itself, he commuted some pension. For that lump sum amount, 3 lakhs he received. For balance pension is there, no? He did not sell it. He did not liquidate it. So, for that, he is getting 5,000. Compute gross total income. Oh my God. They are asking gross total income. Gross total income means what? Income from salary plus income from other sources, income from house property, PGBP, all that. But in this case, this employee, they have given only income from salary details. So income from salary. First, what should we compute? Gross salary. While computing gross salary, we should tax all these items. Then we should give standard deduction. Then we will get income from salary. Since other heads income is not there, income from salary itself is gross total income. That's it. Now, why late? So let's go. So computation of income from salary. Basic salary. How much is the basic salary? 20,000 per month. So for how many months? 20,000 into 10. So how much? 2 lakhs. Okay. Dearness elements. This is how much? 50% of basic salary. Yes or no? 50% of basics, which is nothing but 1 lakh. Yes or no? Correct? Then what else we have got? So basic over DA we considered, over these two I considered. Now from here, from the beginning, let me check. Gratuity he received, leave and cash. No, I will come to retirement benefits at a time. Gift. Company gave him a gift voucher worth 6,000. So gift voucher. Since it is exceeding 5,000, fully taxable. 6,000 is fully taxable. Alternatively, note number 1. I can only tax 1000 rupees. Up to 5000 I'll claim exemption, only 1000 I can tax. Both the treatments are correct. That's why note number 1, alternative answer is given. Alternative point is given. Fine. Colleagues gifted, that you no treatment, this is over. Now third point you see. As per the scheme of the company, he was offered a car which was purchased on 30th January by the company for 5 lakhs. Okay. He was offered a car which the company purchased for 5 lakhs. Now, the company has recovered 2 lakhs from him for the car. Company depreciates the vehicle at 15% SLM. At what method? What method company depreciates doesn't matter. What method company is depreciating doesn't matter. So at the time of retirement, so company gave him a car which company purchased for 5 lakhs. This employee purchased now. Getting it? Now actually, I have a doubt here. Here I have a query. Getting it? Here I have a query. Now, whether the company gave him at the time of retirement directly selling, or he's actually using the car from the employment. From the employment date onwards, is he using the car? So that information they have not given. So assumption can be, any assumption can be taken. Yes or no? Able to understand? Just a minute. Yes. So that information, whether the car has been given for him for usage also, that information is not given. Since nothing is given, we assume that this fellow has not used the car at all. Therefore, for use of movable asset, 10% per annum of original cost, that provision will not apply. Directly he bought from the company. Now, first of all, company purchased the car when getting it. Transfer of car. Working note number 1. Okay, so I will put working notes in the next page itself. Working note 1. What is the original cost of the car? Original cost of the car, 5 lakh. 5 lakh. How many completed years were there? Company, they purchased it on 30th January 2020. This fellow on 31st January 2023 he purchased. Now 30th January 2022, 29th January 2021, one completed year. 29th January 2022, another completed year. 29th January 2023, 3 completed years. So company is owning the car for 3 years completely. After that 1 day gap, this fellow purchased. Now for 3 years we should claim notional depreciation. What is the perquisite rule? What is the valuation rule for this? 20% from 20% first year depreciation from 30th January 2022, 29th January 2021. Yes or no? How much? How much is the depreciation? 5 lakhs into 20%. So 1 lakh. This is for 1 completed year. Okay. What is the closing? What is the value for after that? 4 lakh. Now again minus 20% on WDV from 30th January 21 to 29th January 2022. Again another 20%, which means 80,000. Correct? Now again closing value 3,20,000. Again minus 20% because 3 completed years were there. WDV 30th January 2022, 29th January 2023. How much it is? 3,20,000 into 20%, 64,000. So what is the closing value as on the date? 3,20,000 minus 64,000 is a closing value. So value of the car as on 31st January 23, when this fellow purchased. Yes or no? 2,56,000 is the value of the car. Now this person has paid to the company how much? Paid to company how much? 2 lakhs he paid. So 2,56,000 worth of car, he paid 2 lakhs. Therefore taxable perquisite how much? 56,000. So substitute this value here. So how much is the answer here? 56,000. Understood or not? Next. So car adjustment is over. Let us highlight that in green color. So car adjustment is over. Gift voucher is over. LCD point we considered. Basic and DA point we considered. Sorry, pension is there, man. Pension is there. So received pension of 5,000 per month from 1st February to 31st March. Okay. So this is called uncommuted pension. What is it called as? Uncommuted pension. How much is receiving? 5,000 from retirement date. Up to 31st March only. In this year it will come. Next month, April onwards also is getting pension. But that is taxable under next year. Because we are computing salary income from 22, 23 previous year. Nothing but assessment year 23, 24. Correct? Huh? So is equal to 10,000. Okay. Then. Now, so this also we considered. Now let us consider commuted pension. How much commuted pension? 3 lakhs. Okay. How much he commuted? 2/3 of the pension. by sacrificing 2/3 of the monthly pension, which means originally his monthly pension would have been 15,000. Since he sacrificed 2/3 and received lump sum 3 lakh, only 1/3, that is 5,000 only he is receiving. Understood? So how much commuted pension he is receiving? So taxable commuted pension, how much is taxable? Working note 2. So I'll just put a working note 2. So what is working note 2 here? Working note 2, taxability. So commuted pension received, how much is received? 3 lakhs is received. Now tell me, how much is exempted? This fellow is receiving gratuity also. If a person is receiving gratuity, also received commuted pension, then 1/3 of full pension value is exempted. How to find out full pension value? Arey man, 3 lakhs I received for 2/3. So which means 3/2 is how much? For 2/3, 3 lakhs. Full value is how much? Is equal to 4,50,000. How to identify? So 3 lakhs, this is equal to 2 portions multiplied by what is the full portion? 3. So you will get 4,50,000. In that 1/3 is equal to 1,50,000. So how much is taxable commuted pension? 1,50,000. By the way, this is exemption given under 1010A, 10 clause 10A, correct? So therefore, how much is taxable here? Retirement benefits, I'll put it in red color. 1,50,000. Okay. Next, then this fellow received gratuity of 6 lakh and he is covered under Gratuity Act. Okay, he is covered under Gratuity Act. Gratuity 10 subsection 10 and working note 3. Okay, so working note 3. So gratuity received how much? 6 lakhs. Minus exemption is what? Lower of following. What are they? First criteria, actual amount 6 lakh. Statutory amount 20 lakh. Third criteria, 15/26 into completed years of service or part thereof in excess of 6 months. 30 years 1 month. So 30 years. Yes or no? Multiplied by last drawn salary. Last drawn salary means what? Salary means what for gratuity? Basic plus any DA. Yes or no? If Gratuity Act is not applicable, salary means what? Basic plus DA for retirement plus commission percentage of turnover. So here any DA we can take. Salary is what? 20,000. DA is what? 50% of salary. 10. Last drawn salary. When he is retiring, his salary is 30,000 is equal to. So 30,000 into 30 into 15/26 is equal to 5,19,230. So whichever is lower means what? This one. So this is only exempted. 5,19,230. That is exempted. So what is the taxable salary? 6 lakh minus 519,230 is equal to 80,770 is taxable salary. That's it. So how much is taxable? Sorry, gratuity. How much is taxable gratuity? 80,770. 80,770. Just a minute. That's it. Now finally, leave salary. He has received leave salary also, for which 10 clause 10 AA exemption is available. Correct? For that, working note 4. You need to write all this in exam clearly. Getting it? I'm just scribbling for explaining. So, but in exam you should write neatly. So, how much is the leave encashment this fellow received? 3,30,000 he received. Okay. So, leave encashment, leave salary received how much? 3,30,000. Okay. Minus exemption under 1010 AA. How much? Lower of the following. So, first criteria 3 lakhs. That's the maximum exemption. Actual amount received 3,30,000. Third one, 10 months into average salary. Fourth one, unutilized leave we should calculate. How to calculate unutilized leave? First of all, company gave him how many leaves for every year? He was credited 30 days leave for each year. 30 days for each year he was given. And like that, 30 days were there, no? So leave encashment of 3,30,000 received for 330 days leave. That is balance in his account. So he is given every year 30 days. So like that he was given for 30 years 900 days. Now he utilized some leaves already. Unutilized leave is already how much? They gave unutilized leave directly. We need not compute. In some questions, no, they'll give you leave total available, leave utilized. So you should compute unutilized leave very clearly. Here, unutilized leave they already gave. What is the unutilized leave? And remember, while computing unutilized leave, how to compute unutilized leave? Gross leave minus utilized. How to compute gross leave? Company policy or company policy, company given leaves every year or 30, whichever is lower. Here company is giving 30 only, so no problem. So they considered 30 days only for every year for gross leave minus utilized leave 330. So can I take directly 330? Absolutely. So 330. Sorry, so 330 multiplied by average salary divided by 30. So first we should compute salary. Salary means what? Basic plus DA for retirement plus commission percentage of turnover. DA for retirement is not given, only basic is given. So salary is 20,000. Last 10 months salary also we don't know. So for last 10 months also, this is only last 10 is equal to last 10 months salary is what? 2 lakhs. Average of 10 months means again 20,000. So here 20,000, 10 months into average salary 20. So here it is 2 lakhs. Third criteria. Fourth criteria, 2 lakh 20,000. 2 lakh 20. Yes or no? This one. Do you understand how we computed? They have given in the problem directly unutilized leave itself. Generally, what we do as per our formula, annual leaves per annum or 30, whichever is lower. Here company has 30 or 30, whichever is lower, 30. Multiplied by number of years completed 30, 900 minus how many he utilized. Utilized point they have not given. How many he has unutilized they have given 330, which means utilized is how much? 900 minus 330, almost 570 utilized. So 900 minus 570 is equal to 330 only. Already that they gave. So that's why I did not apply the formula. Directly they gave unutilized leave value 330. Getting the point? Remember, this unutilized value 330 also computed how they have policy of 30 days only in a year. So which is fine. So with that policy, unutilized leave is 330. So no problem. So for 30 days, you are getting 20,000 salary. For 330 days, what is the salary? 2,20,000. Correct only, na? That's it. Now whichever is lower, 3 lakh, 332, 220. 2 lakhs is lower. Therefore, 2 lakhs is exemption under leave encashment. 1,30,000 is taxable. Are you clear? So 1,30,000 is taxable. 1,30,000 is taxable. Now is there anything else? Leave encashment also we have considered, taxability, gratuity we considered, car we considered, commutation pension we considered, gift voucher considered, basic DA pension uncomputed, everything is considered. Now what is the gross salary? By the way, understand, this is not gross total income. What am I computing right now is only a gross salary. What is gross salary? So 2 lakhs plus 1 lakh plus 6,000 plus 56,000 plus 10,000 plus 1,50,000 plus 8770 plus 1,30,000 is equal to 7,32,770. Okay. Now from this standard deduction, this is gross salary. This is gross salary minus standard deduction. How many we have? First of all, deduction under section 16. Inside that first deduction, standard deduction. How much? 50,000. Entertainment elements. This fellow is not a government employee and moreover he did not receive it first of all. So profession tax paid, that data is not given. Therefore, 732 minus 50,000. 6,82,770. 6,82,770 is total income. This itself is income from salary. This itself is gross total income. Answer is over. Now let's look at 6,82,769. We got 770. 1 rupee is rounded off. That's not a big deal. Getting it? Now there is an alternative. Gift point, we should write an alternative view. What? Alternatively, gift only excess of 5,000 is taxable. In that case, 1,000 only taxable. In that case, gross total income, gross total income would have been reduced by, in that case, gross total income would have been reduced by, gross salary would have been reduced by 5,000. So 737 would have been gross salary. Actually, here they gave a wrong wording. It's not gross total income, it's gross salary. Getting it? So they have given entire answer here clearly. Okay. See, even that and all not required. Very easy. The problem is very easy. If at all you are able to recollect all the concepts, if at all you understand all the provisions, applying the provision is very easy. Next, almost we spent 15 minutes on solving that. Generally, if that question comes in exam, it will be for 10 to 12 marks for sure. If this question, whatever we solve, no, as it is, they will not ask because that's a very big question. Okay, next 21. So what are they saying? Sri Bala, employed in ABC Company Limited as a finance manager, gives you the list of perquisites provided by the company for him in the entire year. Okay. So many were there. Domestic servant was provided at the residence of Bala. Salary of domestic servant is 1500 per month. A servant was engaged by him and the salary is reimbursed by the company. Okay, this fellow only hired, company is reimbursing. Reimbursement is taxable for all employees. So 1500 into 12 months. How much? 18,000 rupees for servant taxable perquisite. Okay. In case if the company itself has provided domestic servant, what is the value of perquisite? If the company itself provided servant, if the company itself directly gave the facility, then it is taxable only for specified employee. At the time, whether Bala is getting monetary benefit of more than 50,000 yearly or not, we should check. Then we will tax it. First of all, compute chargeable perquisite in the hands of Bala for AVA. Okay, fine. So anyhow, this is just a note point you have to write. This is not there in the problem. This is just a note point. If at all it is given as a facility only for specified employee, it is taxable. Just note point if you write. That's enough. Next. Free education was provided to two children, Aarti and Ashok, in a school maintained and owned by the company. Employer education facility. The cost of such education for Aarti is computed at 900 per month. Since for Aarti, education cost is not exceeding 1000, it is fully exempt. Whereas for Ashok, it is 1200 per month. So for one of the children of the employee, cost of similar education is exceeding 1000, fully taxable. So 1200 multiplied by 12. 14,400, correct? Just check out. 12 12s are 144 into 1200. Yeah, 14,400. Alternatively, only 2,400 is taxable. Up to 1,000 you can give exemption, 200 you can tax. That's the alternative answer. Now, the employer has provided movable assets such as television, refrigerator, AC at the residence of Bala. The actual cost of these assets to the employer, yes or no? What is the original cost? 1,10,000. So what is the perquisite value? Original cost into 10% is equal to 11,000 we will get. Yes or no for this using. Remember, this is only provided for usage, man. Further, a gift voucher of 10,000 is given on the occasion of his marriage anniversary. It is given by company to all employees. Gift voucher of 10,000 given on the occasion of marriage. In reality, what I do, since it is given on the occasion of marriage, gift received from anybody under other sources, it is exempt. But then, since it is asked as a employment problem, since it is asked related to salary chapter, salary question, we will consider it as because of employer-employee relationship, I am receiving this. So what I can do, since the value of the gift is exceeding 5,000, I will tax it because you are receiving from employer. Is there any exemption for occasion of marriage in salary chapter? In salary chapter, nothing is discussed. Are you receiving gift from the employer? Yes. Is it value exceeding 5,000? Yes. Fully taxable. Telephone provided at the residence of Bala and the bill of 25,000 was paid by the company. Telephone facility is exempt. Yes or no? Then housing loan at 6% per annum. Okay, housing loan at 6% per annum was given to Bala. Okay, amount outstanding as on 1/4/2000. Yeah, housing loan is given at 6% per annum to Bala. Amount outstanding as on 1/4/2020 to 6 lakh. Shri Bala pays 12,000 per month towards principal on 5th of each month. Okay, so this requires little computation. Now, anyhow, let us solve this problem. So, what are all taxable? First one. Domestic servant 18,000 taxable. Yes or no? Taxable perquisite they are asking. They are asking you to compute total perquisite value. Domestic servant, how much is taxable? 18,000 rupees. Okay. Then free education provided, in that only Ashok related one is taxable. So education facility, how much is taxable? Only 14,400 is taxable. Alternatively, note number 1. Only 2,400 can be taxed. In that case, answer could have been, answer will change to that extent. Then employer gave a movable asset for usage. Actual cost of these assets were 1,10,000. So original cost. So movable asset usage. Movable asset for use. So what is the benefit value? 11,000. Next, gift voucher of 10,000. Since value exceeds 10,000, fully tax, sorry, 5,000. Since it is exceeding 5, it is fully taxable. Alternatively, only 5,000 is taxable. Alternative answer is 2,400. Here alternative answer is 5,000. Only 5 can be taxable. Okay, fine. Next, telephone facility is fully exempt. Telephone facility is exempt. Yes or no? This is not taxable. Interest, I mean loan, housing loan, perquisite on concessional loan, working note 1. So this we need to compute. Now remember how to compute concessional loan. You should calculate maximum outstanding monthly balance at the end of each month. 12 months list out. Total it divided by 12. You will get average into rate of interest you apply. Getting it? Now you see here, the State Bank of India is lending at 10% as on 1st April, housing loans 10%. But company gave him the loan at 6% only. 4% interest benefit is given. Yes or no? Fine. Only that 4% is taxable. Now, as on 30th April 2022, how much is outstanding? First of all, 1st April 2022, 6 lakhs is outstanding. Now every month 5th date is paying 12,000. 5th April he would have paid 12,000. So 30th April how much is outstanding? 5,88,000. Now 30th May 5,76,000. Then 31st May. Then 30th June 5,64,000. 5,52,000. Then 5,40,000. Then 5,28,000. Then 5,16,000. I'm just reducing 5,04,000. 12,000 I'm reducing. 12,000. 4,92,000. 4,80,000. How many months we have completed? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Means up to January 30 we have done. February month outstanding. February month end. 4,68,000. Then March month end complete outstanding 4,56,000. This is the maximum outstanding monthly balance. This is what? Maximum outstanding monthly balance at the end of each month. So on this, what is the rate of interest taxable? Taxable rate of interest is 4 because 10 is market value. Company gave 6, 4%. This is per annum, but you should only calculate for 1 month. So 4 into 1 by 12, 4%, man. 4% into 1 by 12, 4% into 1 by 12. Yes or no? Instead of that, I will do one thing. Since amounts gap is same, no, I can take this opening plus closing. 5,88,000 plus 4,56,000 divided by 2. 522 on that 4%. So what I did is on this and on this, because the gap is even. Yes or no? So arithmetical equation, arithmetic mean of opening and closing I can take. So average outstanding 5,88,000 plus 4,56,000 divided by 2. 5,22 is average outstanding. What is the average outstanding? 5,22,000 into 4% directly. Year full average how much is outstanding? 522 into 4% is equal to 2880. Instead of this, if at all you did not understand this point, if at all in exam it didn't strike you, you are not confident, you can do one thing. 5,88,000 into 4% divided by 12. Memory plus. 5,76,000 into 4% divided by 12. M plus. 5,64,000 into 4% divided by 12. 5,52,000 into 4% divided by 12. 5,40,000 into 4% divided by 12. 5,28,000 into 4% divided by 12. So 5,04,000 into 4% divided by 12. 4,92,000 into 4% divided by 12. 4,80,000 into 4% divided by 12. 4,68,000 into 4% divided by 12. And 4,56,000 into 4% divided by 12. So I think one thing, 5,16,000 I missed it. So if you calculate, you will get 20,880. You calculate in this way, you will get the answer, or opening plus closing by 2, you will get the answer. So 20,880 is the interest amount to benefit this fellow got. So how much is the perquisite for loan related? 20,880 worth of interest he saved by taking loan from the company. Whatever interest he saved is a benefit. It's taxable as income from salary as a perquisite. Easy or not? Now, is there any other perquisite? So have we considered housing loan? We considered telephone facility, we considered gift, we considered this education, we considered domestic servant, everything. Now what is the total perquisite value? What is the total perquisite value here? So 18,000 plus 14,400 plus 11,000 plus 10,000 plus 2880 is equal to 74,280. Alternative answer is what? Here instead of 10, 5 only you can take. In that case 5,000 will be reduced minus 10,000. Alternative answer is only 59,280. Alternative is 59,280. We'll see. Oh, they have given independently. Yeah. Fine. They have given total answer. 74,280 is the total answer. That's what we have got now. So total answer is 74,280. Fine. That's it. Alternatively 57,280. Yeah, that also we did correctly. 59,280. 57,280. Yeah. Like what does it mean? Where we did wrong? In case alternative view is taken, 18,24 correct to 2880. This is 11. Just a minute. Correct only na. Alternatively, here 200 multiplied by 12, 2,400 only taxable. So 12,000 we should reduce. Correct. So alternatively 74,280 minus here 5,000 you reduce minus here 12,000 you reduce because 24 only taxable na. 57,280. That's it. Next. So let's continue the test your knowledge questions in salaries. Here some 5 questions were there. So first I will discuss from the third question. 1 and 2 I'll come back at last. Okay. So first let me discuss third question. Now, so what is the data information given in this third question? Remember, before you solve these questions, you must have done one proper revision of the salaries chapter. Then only come and do these questions. Of course, you can do well even directly. But preferably, once if you complete the concept part, provision part revision, if you continue watching this, that will be more better. Directly watching sums is not a correct option. Okay. Yes. So Mr. X is employed with AB Limited on a monthly salary of 25,000 per month. And he is getting entertainment elements commission of 1,000 rupees per month each. Means commission 1,000 rupees per month, entertainment elements 1,000 rupees per month. You should immediately remember the moment when you see entertainment elements, it is fully taxable. However, for a government employee, it is deduction is allowed under section 16. Yes or no? Fine. The company provides him the following benefits. So whether he is a government employee, non-government, we don't know. Getting it? If at all data gives government employee entertainment elements deduction, you should remember. Fine. A company owned accommodation. So company owned accommodation is provided to him at Delhi. Furniture costing 2,40,000 was provided on 1st August. Okay. So for him, accommodation is given. When it is given, they have not given. Assume that it is given from 1st April itself. Later on, furniture was given on 1st August. Now, furniture costing 2,40,000 means that's a own furniture. Own asset given for employee personal purpose, movable asset 10% per annum of the original cost. And I told you, whenever we are computing salaries, income, gross salary, accommodation related perquisite, we should compute at last. Correct? Further, a personal loan of 5 lakh rupees was given on 1st July 2022, on which company is charging 6.75% rate of interest. Okay. The entire loan is still outstanding, means no repayment at all. SBI rate of interest is 12.75. So market rate of interest is 12.75, whereas company is charging 6.75. Indirectly, employee is getting 6% benefit. So 5 lakhs into 6% is the per annum benefit. Since he got it from July, 5 lakh into 6% per annum into 9 by 12. Only for 9 months he got the benefit in this year. So that is the perquisite value. Anyhow, we will compute. His son is allowed to use motorcycle belonging to the company. So company has some motorcycle, two-wheeler. His employee's son is using use of movable asset. So his son is allowed to use of movable asset. What is the perquisite? 10% per annum of the original cost. For full year, 10%. The company had purchased this motorcycle for original cost of 60,000 on 1st May 2019. Okay. This motorcycle was finally sold on 1st August. Oh, fine. So company purchased on 1st May 2019. 1st August it is sold. But in this year 22-23, no, from 1st April 22 to 31st July 22, We have given to the employee for usage. So on 1st August, employee purchased it. Fine. After purchase, there is no more usage. It's his own. It's his own thing. But up to purchase date, up to 1st August, he is using that asset now as an employee. From 1st August, he became owner. But up to 31st July, he is using no. For using, we should charge perquisite. What is a perquisite? 10% per annum of the original cost is the perquisite, use of movable asset. Now, on 1st August, the asset is transferred. When an asset is transferred, movable asset, computers and electronic items, 50% WDV method for every completed year. Motor car, 20% WDV. Any other asset, 10% SLM. Since it's a motorcycle, it comes under any other asset. For every completed year, for which company is the owner, employer is the owner. Original cost minus 10% SLM for every year. Reduce it. What is the WDV? Nothing but what is the value of the asset as on 1st August in the hands of the company, find out. That much value of the asset, at what price it is given, check out. Balance is perquisite. Don't worry, we will compute. Professional tax paid is 2000. Mr. X only paid. It's a deduction under section 16. Compute income from salary. Look, they are asking you income from salary, not gross salary. What is the difference between gross salary and income from salary? Deductions. Deductions are 3. Yes or no? Like a standard deduction, 50,000. Profession tax paid, entertainment elements. Entertainment elements is only for government employee. Here nothing is given, the data. So he is not a government employee, non-government employee. That's it. Interpretation is over. Now let's solve. So like what they are asking us to compute what is the income from salary. Correct? Just a minute. Yes. So they are asking us to compute income from salary. Now. So what is monthly salary of the employee? So basic salary 25,000 per month. Now see in this question no retirement point is given. So full year we have to compute. So 25,000 into 12 months, how much is the salary? 3 lakh. Okay. Then he is getting entertainment elements 1,000 rupees. Commission again 1,000 rupees. So entertainment elements 1,000 rupees per month means 12,000 per annum. Commission also 1,000 rupees per month. It is not a percentage of turnover. 12,000. Okay. Then accommodation we will discuss later. At last we will have to value it. Company gave a personal loan of 5 lakh when 1st July. Rate of interest is 6.75 per annum. For 12 months 6.75. For 9 months proportionately we should calculate. Now SBI is charging 12.75. So concessional loan. Yes or no? How much you should charge? 5 lakh. Loan is given 5 lakh. Yes or no? Loan is given 5 lakh. Market value is 12.75. But company is charging 6.5 divided by 100. So the 6 is benefit multiplied by 9 by 12. So how much is the answer? 5 lakhs into 6% into 9 by 12. So 22,000 rupees 500. This much interest employee is saving. This much interest employee is saving because he's borrowing from the company. Since it's a saving for the employee, benefit for the employee, perquisite and taxable. Simple. Next. His son is allowed to use a motorcycle belonging to the company. So first of all, his son is using the motorcycle of the company. Original cost of the motorcycle is what? 60,000. Until when he is using it as an employee, up to 31st July, he is only using it as an employee. So April, May, June, July, for 4 months, he is using the motorcycle, which is not their own property, company property they are using. For that use of movable asset, example here it is bike, yes or no? What is the original cost? 60,000. For full year if you use, how much is the perquisite? 10%. But here it is only 4 by 12. Only for 4 months he is using. Sir, 4 months what? He is purchasing? No. After purchase, it is not company property. Therefore, for usage of that asset, there is no perquisite. After he buys, it's his own property. Then onwards, no perquisite. So, 60,000 and 10% means 6,000 into 4 by 12 means 1 by 3, 2,000 rupees. Transfer of movable asset. Now, after using it for 4 months in this year, he purchased it. At what price he purchased it? Let us do a working note 1. At what price he purchased it? Working note 1. He paid 30,000 rupees. Which one? Motorcycle. You see, the motorcycle is ultimately sold on 1st August. So this employee purchased on 1st August 2022. Now what company has to do? First of all, what is the value of the motorcycle? 60,000 worth. 60,000 worth of motorcycle, we sold it for 30. Now employees getting 30,000 benefit, like can we tax it? No. The company purchased it on 2019, but selling it on 2022. Perquisite valuation rule says reduce notional depreciation for every completed year. How much I should reduce? 10% SLM method. What is it? 10% SLM method. In math on it is covered once again, revision class. Just watch it if you want once again. Getting it? So 10%. First of all, 1st May company purchased. How many years company is owning this? From 1st May to 1st August 2022, how many years completed? From 1st May 2019 to 30 April 2021 year. 30 April 2021 second year. 30 April 2022 third year. So 3 years completed. 30 April 2023 fourth year will complete. But before fourth year is completed, in the hands of the company sold it. So 3 completed years. For 3 completed years, company is only the owner. For these 3 years, it's in the name of the company. So notional depreciation as per perquisite rule. For 3 years, what is notional? 10% is the rate of depreciation into 3 years. So 60,000 into 10% is how much? 6,000. For 3 years, strike line method means same depreciation, 18,000. So original cost is 60,000 minus notional depreciation for 3 years, 3 completed years, 18,000. So the value of the motorcycle is 42,000 in 2022. Now this motorcycle, this much valued cycle, to the employee we sold for what price? 30. Means employee is getting how much? 12,000 is the benefit value. This is what perquisite valuation rule says. Correct or not? So 12,000 is the benefit. So transfer of motor vehicle 12,000. Okay. Next, profession tax paid. This is relevant for deductions purpose. That's it. Now finally, accommodation facility. Now to the employee we have given accommodation. Company has given accommodation. So accommodation is given. Getting it? Working note 2. Fine. Remember this is a furnished accommodation. First compute accommodation perquisite. Where it is provided, accommodation is provided to him in Delhi. Now, more than 25 lakh population. So, what is the perquisite value? 15% of salary is the perquisite. Now, salary means what? Basic, plus DA for retirement, plus commission, plus bonus, plus taxable portion of allowances. Now, basic is how much? Monthly basic is 25. But this fellow has taken this accommodation for entire 12 months. So, 3 lakhs. DA is not given. Commission is 12,000. Bonus is not given. Taxable portion of allowances, entertainment allowance is there, 12,000. Yes or no? So, entertainment allowance is fully taxable. So, in this question, basic is given 3 lakhs. DA for retirement is not there. Commission is taxable amount 12,000. Bonus is not there. And entertainment allowance is there. No, taxable portion of allowance means what? In this problem, what allowances are there that are taxable? Only one allowance is there, that is entertainment, fully taxable. So 3 lakh plus 12, 12 plus 12, totally 3 lakh 24,000. On this 15%, that is treated as accommodation value. 3 lakh 24 into 15%. This is what? 48,600 rupees is treated as perquisite for accommodation. Not only that, in the accommodation, furniture is also provided, but it is provided not throughout 12 months. From 1st August only it was provided. From 1st August to 31st March, 8 months only. 2,40,000 into use of movable asset 10% per annum perquisite multiplied by 8 divided by 12 is equal to 16,000. So, what is the furniture related perquisite? 16,000 rupees. That's it. Now you see, now you observe. This is what if I total completely, we will get gross salary. First of all, before you totaling, is there anything else that we ignore? Salary we computed, entertainment allowance, commission, RFA, furniture, loan related thing be taxed, motorcycle usage be taxed, transfer, both be taxed. That's it. So now, so what is the gross salary? 3 lakh plus 12,000 plus 12,000 plus 22,500 plus 2,000 plus 12,000 plus 48,600 plus 16,000. So total gross salary. What is the gross salary? Gross salary 4,25,100 minus deductions. Standard deduction how much? 50,000 flat. Entertainment allowance no deduction because he is not a government employee. Profession tax 2,000. So therefore, what is the balance amount? 425 minus 50,000 minus 2,000 is equal to 3,73,100. I hope it is correct. Once again, 425,100 minus 52,000 is equal to 373,100. This is the answer. Income from salary. Remember in May 23 attempt, salary question itself is asked for 7 marks. PGBP based total income problem was asked for 14 marks. Getting it? Many students, they straight away open tedious, this big chapters and try to mug up 7 marks portion on the tedious. In the time the tedious provision is completely, you prepare completely perfectly. Within that time, I can tell you 3 heads of income you can properly prepare. You can prepare 3 heads of income. Tedious takes lots of time. Preparation. Classes wise, it is very simple, but preparation takes lots of time because in tedious, we have 30 plus sections, 35 sections we have in tedious TCS. So now remember in section, percentages, amounts, it's not an easy task, tedious chapter. What is the weightage? In the May 23, the weightage from tedious is only 7 marks. For getting that 7 marks, students spend lot of time on tedious chapter. The same time, if you spend on heads of income, you become very perfect. You become more perfect. PGBP, you can become perfect. Capital gain, salaries. In these 3 heads, you can become super ultra master. The time that you invest on tedious, if you invest on these 3 chapters, you become ultra master. Getting it? And what is the weightage on 3 head of incomes in the last May 23? 24 marks approximately came. Many students did wrong because their focus is only on tedious. And tedious, do they score full 100 out of 100? 100% mark? No, because they do mistake definitely in tedious. Be clever in choosing your exam strategy. Getting it? Anyhow, I'll make a separate video on what is the income tax strategy for the November exam. So what are the chapters that you must read? What chapters you can keep it aside as a last priority. Okay, don't worry. So 3,73,000 is the answer. Fine. Question number 3. So what is the income from salary? Yes, 3,73,000. That's it. I hope you got clarity. Question number 3 completed. Then question number 4. Question number 4. Mr. Balaji, employed as a manager in Beta Limited. Okay, he furnishes the following information for the year ended 31st March. Basic salary up to 31st October, 50,000 per month. Whereas from 1st November, 60,000. 31st October means how many months? 7 months. For 7 months, his salary is 50,000, which means 3,50,000. Whereas for remaining 5 months, November onwards, it is 60,000. So it is equal to 3 lakhs. So total basic salary is what? 6,50,000. Okay. First of all, what are they asking? I'll see here. Compute salary income chargeable to tax in the hands of employee. Means they're asking income from salary which is taxable. Means gross salary you should compute, from the deductions you should eliminate, then income from salary. Fine. Now I got the clarity. Now, dearness allowance, 40% of basic salary. Dearness allowance is what? 40% of basic salary. Now, is this DA for retirement or not for retirement? Nothing is given. It is not for retirement, not as part of terms of employment. Anyhow, on that 40% means what? 10% means 65,000, 1,30,000, 2,60,000. 2,60,000 is DNS allowance. Okay. Bonus equal to 1 month salary paid in 1 month salary paid in October 2022 on basic salary plus DA applicable for that month. Oh. Whatever salary paid in October month, whatever salary that is paid in October month, bonus. What is the salary that is paid in October month? 50,000. Plus DA how much? That much is bonus. So here bonus is equal to how much it is? 50,000 plus DA is how much? 40% of basic. 40 means how much? 20. So this employee has got bonus 70,000 rupees bonus. So total basic salary 6.5 lakh. DNS allowance 2.6 lakh. Bonus is 70,000. That's it. We are converting into money. That's it. Contribution to employers. Contribution of employer to RPF at 16% of basic salary. How much employer has contributed to RPF? 16% of basic salary. And I told you, whenever you are computing taxable RPF contribution, first convert it into money. Some students, they may directly apply 4% and tax it. No. 16% of basic salary he contributed. But how much he can contribute? 12% of basic plus DA for retirement plus commission percentage of turnover. That much he can contribute. Yes or no? That is exempted. Now here 16% of basic. 6.5 lakh into 16% he contributed. 1,04,000. Now out of this, how much is taxable? We should identify. 12% of salary. Compute 12% of salary as per provision. Basic how much? 6,50,000. DA for retirement how much? Nothing is given. Here DA nothing is given, so it is not a retirement benefit. So commission percentage of turnover nothing is given. Therefore into 12%, 78,000 is exempted. Now company has contributed 104,000. So therefore 26,000 is taxable. I'm just telling you, you should always convert it into money and apply the provision and then calculate. Never calculate straight away. You may say 4%, you can directly calculate and put that, you will go wrong answer. Suppose here 16% of basic he contributed. What if this DA is retirement DA? What? Your answer will change a lot. Next. Profession tax paid 2,500. Stand deduction you will get, no, there you will get 2,000 was paid by employer. This is a benefit. 2,000 profession tax was paid by employer. It's a perquisite. It is treated as a taxable salary. Facility of laptop and computer was provided to Balaji for official and personal. Facility of laptop and computer if it is given to employee. Use of mobile asset, computers and laptop if it is provided for usage, 0. Any other asset, 10% per annum SLM. Sorry, 10% per annum is the perquisite value. So here 0. Motor car owned by the company. Okay. Exceeding 1.6 liter. Okay. Car capacity is more than 1600 cc. It is provided to employee from 1st November 2022. Only from 1st November, not from 1st April. Only from 1st November means up to 31st March means 5 months only. So from 1st April 2022, company provided a car. Motor car was provided by whom? Employer. Which is used for official and personal. Now repairs. Running and maintenance expenses of 45,000 were spent on these 5 months. Were fully met by company. Company only taking care of entire expenses. Company only gave the car. The motor car was self-driven by employee, so no driver is provided. What is the perquisite value? Car owned by company, expenses made by the company, used for both official and personal purpose. Car capacity is more than 1600. 2400 is the perquisite value per month. Multiplied by 5 months. How much it is? So 12,000. 12,000 is the perquisite. Yes or no? Deemed perquisite value is how much? 2,400 per month. Then the company has given leave travel concession to the employee. So employee we have given leave travel concession. His wife, employee, 3 children, 1 daughter and twin sons. Twin sons are treated as single. Yes. Cost of air tickets reimbursed by company 30,000 for adults, 45,000 for children. Balaji is eligible for availing this exemption to the extent permitted. Completely exempt. Completely exempt. Getting it? Because 1 daughter, twins. Actually 2 children only we will allow. Here 3 children were there. 3 children means 45,000 is for 3 children. 15,000 is supposed to be taxable because for 2 children 30,000 ticket is exempt. 15 is taxable. But twins are considered as single child. So whatever the expenditure incurred for twins, it is considered as 1 single child and exempted. Correct? So here how much is taxable? 0. That's it. I think we have computed most of the answer. We just have to total it. Now let's look at it. So what is the basic salary? 6,50,000. What is the DNS elements? We have computed 2,60,000. 2,60,000. 40%. Correct only, no? Just check out once into 40. 2,60,000. Now how much is the bonus? So we have completed. We considered this. Bonus is 70,000. We considered this also. So bonus how much? 70,000 taxable bonus. Okay. Then contribution by employer to RPF, recognized provident fund. How much contributed employer? So RPF contribution 16% of basic. 6,50,000 into 12%. How much? Sorry, 6,50,000 into 16%. Employer contributed 1,04,000 minus how much is exempted? 12% of salary. Salary means what? Basic, DA for retirement, commission percentage of turnover. Here commission is 0, DA is 0. So basic is how much? 6,50,000. So 12% of 6,50,000 plus 0 plus 0. So 6,50,000 plus 0 plus 0, 6,50,000 into 12. 78,000. So up to 78,000 is exempted. Correct? This is exempted. So 104 minus 78,000 is equal to 26,000 is taxable. Remember, in exam you should always do this working note. You should put it as a separate working note. Contribution, actual contribution by employer, less 12% of salary. Salary means what? Put a definition, give a definition clearly, and put that entire detail notes. Then you compute the answer. Then only put the amount in the main sheet. Don't directly use shortcut. I just did a rough calculation. The same you should do fairly in working note. Next. So that is considered. Profession tax paid 2,500. This you have to claim under deduction. 2,000 was paid by employer. So profession tax paid by employer. How much it is? 2,000 is perquisite. Okay. Facility of laptop and computer was provided to Balaji. Cost of laptop and computer was acquired by company. That and all nothing. 0, exempted. Because laptop and computer facility given is fully exempt. Motor car owned by the company, already we have interpreted 2400 is perquisite value since it is provided for 5 months. 2400 into 5. So 2000 into 5, 10,000, 400 into 5, 2000, total 12,000. Okay. Then leave travel concession is fully exempt. That's it. So what is the gross salary? What is the gross salary is equal to 6,50,000 plus 2,60,000 plus 70,000 plus 26,000 plus 12,000 plus 2,000 is equal to 10,20,000 is the gross salary. Oh my god. Now deductions. What they ask for is income from salary. So deductions. Standard deduction 50,000. Now total profession tax paid to government is how much? 2,500 we pay totally. That's it. Entertainment elements no deduction. 10,20,000 minus 52,500 is equal to 9 lakh. The answer is 9,67,500. This is the answer. That's it. If at all the same question comes in exam, they will ask for 7 to 8 marks easily. 7 marks or maybe 10 marks if you are lucky enough. So 9,67,000 the answer. Just a minute. Yeah. 9,67,000 is the answer. I hope you understood that. You understood. See, it's not about getting the answer. It's about the process which we follow. Is it correct or not? That is important. Answer is a byproduct. I'm telling you. Answer is a byproduct of your process. If you rightly apply the process, you see every point I discussed very clearly. We went only as per the provision that we discussed. Whatever the provision we covered in the class, whatever the provision we discussed, exactly we applied and we got the answer correctly. If the process is correct, solution will be correct. If solution is correct, that doesn't mean process is correct. If process is correct, solution is damn sure correct. But if solution you got right, that doesn't mean process is correct. Next. Then we have question number 5. From the following details, find out salary chargeable to tax. Nothing but you need to compute gross salary minus deductions you should give, then income from salary you get. Okay. For assessment year 23-24, assuming he has not opted 115 BAC, fine. X is a, Mr. X, no. He is a regular, Mr. X is a regular employee of Ram & Co. in Gurgaon. Okay. He was appointed on 1st January 2022, means he is appointed in 21-22 previous year. In the scale of 20,000, 1,000, 30,000. What does it mean? You know, this is called as pay scale. What is it called as? Pay scale. What do you mean by this pay scale? In exam, they'll give you sometimes like this. What does it mean? You know, initially you will get salary of 20,000 upon joining. Once you complete 1 year, you will get 1,000 increment. Like that, every year you will get 1,000 increment until you reach monthly salary of 30,000. So he joined for 20,000 first year. First year he completed. Second year his salary will be 21,000 basic. Third year his salary will be 22,000. Fourth year his monthly salary will be 24,000. Fifth year his monthly salary will be 25,000. Sixth year his monthly salary will be something. Like that, up to 30,000 every year monthly salary increment is how much? 1,000. That's what this means. Now remember, we are computing the answer. We are computing the answer for 22-23, which means 1st April 22 to 31st March 23. And remember, from 1st April 22 to 31st December 22, for 9 months, his salary is 20,000 per month. Whereas from 1st January 23 to 31st March, for these 3 months, his salary is 21,000 per month. Why? From 1st January 2023, he completed 1 year. So 1,000 increment he will get. Don't worry, I'll write in the, I'll write also. He is paid 10% DNS allowance and bonus also. So he is getting 10% DA. 10% we should apply on what? Basic. And he is getting bonus also. Equivalent to 1 month pay. Oh, he is getting 1 month bonus also. Based on salary of March of every year. Okay, March month salary is how much for this fellow? 21,000, not 20. So 21,000 equal bonus also he is getting. He contributes 50% of his pay and DA towards RPF. Company also contributed the same amount. And see, DA is forming part of the retirement. Oh, very good. So 10% he is getting DLA, that is for retirement benefit. He is provided with housing facility which has been taken on rent by the company. So company has taken a house on rent and gave him. Now company is paying how much rent? 10,000 per month. So he has been given free housing facility which company has taken on rent. What is the perquisite valuation for house which is taken on rent and given to employee as a facility? 15% of salary or actual rent paid by the company, whichever is lower. Salary means what? Basic plus DA for retirement plus commission plus bonus plus taxable portion of allowances. This accommodation perquisite valuation you should always do at last. He is provided with the following facilities. Facility of laptop fully exempt. Company reimbursed medical treatment of brother 25,000 who is dependent on him. Where the medical treatment was incurred in, is it incurred in government hospital? No. Is it incurred for specific disease? No. Is it incurred for COVID treatment? No. Nothing is given. Medical treatment is fully taxable. Remember, this is a reimbursement, not an allowance. It's not an allowance. While computing salary for rent-free accommodation, no. In that salary definition, what is to be included? Taxable portion of allowance to be included. Reimbursement we don't include. Perquisites under 17. Perquisite value under 17 we don't include in salary definition. Company reimbursed medical over. Monthly salary of 1,000 of housekeeper is reimbursed. Okay, 12,000 is taxable. Gift voucher of 10,000 on occasion of marriage anniversary, since it is exceeding 5,000, fully taxable. Remember, this is here alternative treatment is it. Beyond 5,000 only you can tax only 5,000, or enter 10,000 you can tax. Okay, alternative answer is possible. Conveyance allowance of 1,000 per month is given by company towards actual reimbursement of conveyance spent on official duty. Since official duty, company gave an allowance. Since it is fully spent, fully exempt, 0. What is the taxable portion? 0. This fellow has been given accident insurance policy, 5,000 premium. Company is only paying, fully exempt. He is getting telephone allowance at 500 rupees per month, fully taxable. Telephone facility is exempt. Telephone allowance is taxable. 500 into 12, 6,000. Fine. Why late? Let's compute. So, basic salary. So from 1st April 22 to 31st December is equal to 20,000 multiplied by 9. From 1st January 23 he got increment, because on 1st January 2023 he completed 1 year. So since he completed 1 year, by 31st December itself, January onwards 21,000 is salary. So 31st March his salary is 21,000 multiplied by 3. So what is the total basic salary? 1,80,000. So 20,000 into 9, 21,000 into 3. So 2,43,000 is basic salary. Now this is basic. Next, dearness allowance. 10% of basics, and they mentioned that it is for retirement purpose. It is retirement purpose. Retirement, non-retirement, it is taxable. So 2,43,000 into 10% means what? 24,300. Then he is getting bonus also, equivalent to 1 month pay based on the March. So whatever March month salary is, that much is bonus. March month salary is what? 21,000. So that is bonus. So 24,300, 21. Okay. Then he contributing 15% of his pay and DA towards RPF. Company is also contributing. Employee is contributing. That's the ATC deduction. In this problem, they are asking only income from salary, not total income. If total income is asked, first we compute income from salary, then we compute other heads, then we get a gross total, then we claim chapter 6A. So employee contribution to provident fund not relevant, but employer is contributing same. So we need to calculate contribution to RPF. Working note 1, you should always do like this working note. Getting it? So working notes, I'll put it in next page. So employer contribution to RPF. How much he contributed? 15% of basic plus DA. How much they contributed? 15% of pay and DA. So basic is what? 2,43,000 plus DA is what? 24,300. On that 15%, 2,43,000 plus 24,300. Correct on here? 243 plus 24,300, correct only, into 15%. So 2,43,000 plus 24,300 into 15%. 40,095 rupees employer contributed. In this, how much is exempted? 12% of salary is exempt. Salary means what? Basic, DA for retirement, commission percentage of turnover. Did they give commission? No. DA for retirement, how much? 24,300. Basic is how much? 2,43,000. What is the total salary? 2,43,000 plus 24,300 plus 0. So 2,67,300. On this, 12% is exempt. So 32,076 rupees is exempted. So how much is taxable? 40,095 minus 32,076 is equal to 8,019 rupees is taxable contribution by employer to provident fund. So 8,019. Okay. Next, he is provided with housing facility. He is provided with housing facility which has been taken on rent. I told you this I will do at last. So rent-free accommodation, working note 2. This I will do at last, not now. So what is the value? This you should always compute at last of the problem. Why it has to be computed at last? I will show you the logic also here. Okay, next, facility of laptop. Exempted, please write a note point. Laptop facility given is an exempted facility as per perquisite valuation rules for use of movable asset. Then company reimbursed medical treatment bill of the brother 25,000 who is dependent. Medical reimbursement is exempted if at all. Reimbursement is for medical treatment of himself or family. Family means a spouse, children, dependent brother or sister, dependent parents. For them, if you reimburse medical treatment, for you if you reimburse medical treatment expenditure in a hospital of government, getting it, or for medical or specified diseases or for COVID, it is fully exempt. Now here it is fully taxable. So medical treatment, reimbursement, remember it's not an allowance, it's a reimbursement. What is it? It is fully taxable. 25,000 is taxable. Then monthly salary of 1,000, housekeeper reimbursement. So housekeeper reimbursement 12,000 fully taxable. Yes or no? Fully taxable. Gift voucher, if any gift in kind or if any gift in kind or voucher is given to an employee, if the value is exceeding 5,000, fully taxable. 10,000. Alternatively, only 5,000 you can tax it. Note number you have to write, note point. In that case, answer will change. Fine. Remember, that's a voucher, not allowance. Gift allowance is fully taxable straight away. Even if 1,000 rupees gift allowance is given, fully taxable. Here it is voucher. Means you can only buy some commodity. It's a kind gift. Exceeding 5,000 value, fully taxable. Conveyance allowance of 1,000 per month given, so 12,000. And completely spent on official duty, fully exempt. Suppose he spent only 10,000, 12,000, 2,000 is taxable allowance. Fine. Here anyhow it is fully spent. He is provided with accident insurance policy, 5,000 companies paying premium benefit, but still exempted. He is getting telephone allowance of 500 per month. Telephone facility is exempt, but allowance is fully taxable. Telephone allowance. How much? 500 rupees is getting 12 months. 6,000 rupees is the telephone allowance. Now we should compute rent-free accommodation facility. So working note 2. What is it? Working note 2. Computation of perquisite for rent-free accommodation. He has been given accommodation which is taken on rent. So in such a case, 15% of salary or actual rent. How much is the actual rent they are paying for the house? 10,000 per month, which means 1,20,000 company is paying, whichever is lower. Now salary means what? For the purpose of RFA, I showed you notes. There are 3 definitions in salaries chapter. Meaning of salary for various computations. For RFA, what is the meaning of salary? Basic. DA for retirement. Any commission, it may be percentage of turnover or fixed commission, plus bonus, plus taxable portion of allowances, only allowances, reimbursements, non-monetary benefits don't take at all. Now in this question, basic is 2,43,000, DNS allowance 24,300, commission is not given, bonus is 21,000. Now taxable portion of allowances, what are all there in this? Allowances. So this we considered. We have to consider bonus, we should consider. Contribution to RPF is not an allowance, not considered for salary definition. Medical treatment is a reimbursement. Housekeeper is a reimbursement. Gift voucher is a kind. Perquisites we don't consider for salary definition while computing rent-free accommodation. Only telephone elements is taxable portion. So that we will consider. So 6,000 is the only allowance that is there which is taxable, is equal to what is salary? 2,43,000 plus 24,300 plus commission 0 plus 21,000 plus 6,000. So 2,94,300 is the salary definition for the purpose of RFA. On that 15%. 44,145. Now company gave this accommodation to an employee which is taken on rent. What is the perquisite valuation rule? 15% of salary or rent paid by the company, whichever is lower. So what is the answer? 44,145 is the perquisite value. I hope now you understood after computation why I did this at last. 44,145. Correct only? Yeah. You should do it at last. So if you do it at last, you can easily figure out what are all to be included. What are all to be included within the definition of salary? This, and this. These 3 and this one. So since you listed out all of them, you can easily figure out what are all to be included in salary definition for RFA computation. That's it, over. So now total it. Now total all this. Now total it. So what is the gross salary? 2,43,000 plus 24,300 plus bonus 21,000 plus 8,001 in RPF contribution plus 44,145 plus 25,000 plus 12,000 plus 10,000 plus 6,000 is equal to 3,93,464 minus deductions. Standard deduction 50,000 rupees minus profession tax paid, entertainment elements. Did they give any information on profession tax paid? Just check it out. Nothing. Entertainment elements deduction only for government employee he will get. First of all, he didn't receive anything to get deduction. So deduction, that's it. The answer minus 50,000 is equal to 3,43,464. This is the answer. Alternatively, if the gift is up to 5,000, you are claiming exemption, only 5 you are taxing. In that case, alternative answer is 3,38,464. This is the alternative answer. I hope you are clear. That's it. Now we will see. If this question comes in exam, no, damn sure 12 marks. 10 to 12 marks. 3,43,464. 3,43,464. Alternative answer did they give? An alternative view for the gift is only 5,000 can be taxed. In that case, what is the answer? They did not give. Very simple. In that case, in this 5,000 we will reduce. That's it. Okay. That's it. Now we still have 2 more questions. We still have 2 more questions pending. Question number 2. This is an exclusive problem on medical facility. You remember we discussed already in the revision also that medical facility perquisite valuation. What is the rule? The following medical facilities are exempted. What are they? Medical facility provided in a hospital owned by employer for the employee and the family member, exempted. If medical reimbursement is given for the employee or his household family member for treatment in government hospital, exempted. For specified diseases, exempted. For COVID, exempted. Even if medical treatment is given, medical insurance policy company has taken, exempted. Medical insurance policy premium employee paid, company reimbursed, exempted. Medical treatment of the employee outside India or family member outside India, entire treatment cost to the extent permitted by RBI, fully exempt. Even traveling and stay outside India, traveling expenditure stay for medical treatment of the employee or the family member plus 1 attendant. Traveling is also exempted, stay is also exempted, provided gross total income of the employee shall not exceed 2 lakhs, excluding travel benefit. Excluding travel benefit, including medical benefit. What is the gross total income? Identify. If it is not exceeding 2 lakhs, exempted. Travel expenditure is exempt. Otherwise, whatever travel expenditure company is paying to the employee is fully taxable. Now let us see. Miss Raki, an employee in private company, she received the following benefits from the company. So from the company she received so many benefits. You see 6 benefits she received. Okay. What are they asking? Whether the above taxability of the benefits. What are the, how out of the above, what are all taxable? Now she got reimbursement for the following. Okay. On treatment of herself in a private clinic. If you go and if you go and get a treatment in a government hospital, prescribed disease, COVID, then only exempt. This is taxable, ma'am. So plus add it. On treatment of herself by family doctor, again taxable. These reimbursements are all fully taxable. Only if you go to government hospital or prescribed disease or COVID disease, then only the reimbursement is exempted. Mother-in-law dependent on her in a nursing home, fully taxable. Mother-in-law is not covered at all in the family definition. Payment of premium on medical policy taken on her health. The company paid this premium, fully exempt. Medical allowance, fully taxable per month, na? So 24,000 rupees is fully taxable. Medical allowance is always taxable. 24,000 is taxable. Medical expenses reimbursed on her son's treatment in government hospital. Children treatment government hospital, exempt. Expenses incurred by the company on treatment of her minor son abroad. Okay, this is abroad. 105. Expenses in relation to foreign travel, her son. This foreign travel, we have to check it. We have to keep it pending and we will check it last. Now, how much RBI permitted for medical treatment and stay? 2,50,000 rupees they permitted. Out of this 2,50,000, no, for medical treatment, I will allocate 105. So, now medical treatment purpose outside India, how much company paid? 105. How much RBI permitted? 105. So, fully exempt. Fully exempt. Now, still 1,20,000 travel expenditure is there. Is this exempt or not is the question. Now, first I will compute what is the total income of this person. Okay. Now, here. First I will compute total income. So 4,000 is taxable, 4,000, 8,000 is taxable. What are all taxable? You just include 4,000, 8,000, 5,000 is taxable, 5,000 is taxable. Then this one, 24,000 is taxable. Then is there anything else? This 5 is exempt, this 5 is exempt, this 105 is exempt, this 75 is also exempt. So that's it. So what is the gross total income? Assuming that remaining income. So right now, what is the medical facilities taxable items? 5,000 plus 24,000, all put together 41,000 only. Let us assume rest of the incomes of the FSE and this perquisite, let us assume it is less than or equal to 2 lakhs. If I assume like this, traveling expenditure of 1,20,000 is also what? Exempt. Because now for traveling purpose, RBI limit is how much is there? 145 limit is still available. 120 only they spent. Company reimbursed 120. So fully exempt. What is the assumption we have taken? Medical facility total value 41. Let us assume other incomes of the SSC put together, gross total income is not exceeding 2. Therefore exempt. Therefore, what is the total amount that is taxable for the SSC for medical purpose? 41,000 rupees only. Correct? So now let's look at the answer. I don't know whether I'm correct or not. So they have not given total answer. Okay, let us see here. Here 17,000 is taxable. 485. Have we seen that? 485 we taxed it. Very good. Medical insurance premium 75. Okay, is a tax-free exempted. So we also took exemption. Medical elements 24 is fully taxable. What we did? We taxed it. Okay. And reimbursement medical treatment 5,000 in a government hospital. So exempted. And here expenditure on medical treatment 105 and traveling 120. The conditions are RBI. Since so does not exceed 2 lakhs, traveling is exempted. So foreign travel expenditure is exempted. So the travel that is excluded from perquisite. Expenditure on medical treatment is also excluded from perquisite. Since medical treatment and stay does not exceed limit given by RBI, they are fully exempt. Travel expenditure, since total income is not exceeding 2 lakhs, it is fully exempt. This is an assumption they have taken. Here for traveling, they have taken an assumption. That's it. So I think our answer is absolutely right. Next. This is second question. Next one. Question number 1. This is regarding house rent elements. This is an exclusive problem given on house rent elements with an amount of complication. Like here, see, I told when I'm explaining the class also, rent-free accommodation, house rent elements and all, when you are calculating perquisite, you should calculate month-wise. You should calculate month-wise, you should calculate perquisite. Month-wise, you should claim exemption. Month-wise, you should claim any deduction and all. And month-wise, you should calculate total taxable value, finally total it and add it in the gross salary. That's the correct procedure. But generally what we do, since whether I calculate month-wise or 12 months at a time, the numbers are same now. So we calculate generally 12 months at a time. But in this problem, for every month, information is changed. Generally, for HRA, how to calculate HRA exemption? How much HRA you receive? Identify. Minus. How much is exempt? Least of the following 3. Rent paid minus 10% of salary. One criteria. 50% of salary if the employee is staying in Metro City. 40% of salary, 50% of salary if the employee is staying in Delhi, Kolkata, Chennai, Mumbai. 40% of salary if the employee is paying rent in any other city. Actual amount, whatever actual amount is that much. Among these three, whichever is lower. Now here, if employee changed city, for 3 months he stayed in one city, Delhi, Mumbai, Kolkata, Chennai. For remaining months, somewhere else he stayed, which means you should compute for these months separately. For some months, he did not pay rent at all. When you have not paid rent at all for 2 or 3 months, no perquisite, no exemption at all for HRA. For those months where you have not at all incurred rental expenditure, for those months if you receive HRA elements, that HRA is fully taxable because in those months you have not paid single rupee rent also. So on that logic, this problem has been framed. Getting it? 99.99% they will not ask in exam at all this kind of question. If at all they ask also, I'm explaining you now. See, RFA, HRA. If at all an employee is given 12 months, for 12 months you should calculate month-wise. That's the logic. But generally, whenever April, May, June, if these 3 months, entire information is same, we can combine it and then do it. Now let us see here. Mr. Mohit is employed with XY Limited. Basic salary 10,000 per month. He is entitled to DNS elements 100% of basics. 50% of which is for retirement purpose. Okay. The company gave him HRA 6,000 per month, which was increased at 7,000 with effect from 1st January. Okay. For 9 months, HRA is 6,000 per month. From 1st January, for 3 months, HRA is 7,000 per month. He also got an increment of 1,000 per month in basic salary with effect from 1st February, which means salary From April to January, salary amount is different. Whereas February and March, salary amount is different. Rent paid by him is as below. April and May, he is not at all paying rent, nil. So for April and May, HRA exemption is 0. June to October, he is staying in Ghaziabad. 6,000 per month rent he is paying, which means in HRA 40% exemption criteria. Whereas November to March, he is staying in Delhi, means 50% criteria. Now you see, you have to calculate here April and May. April and May, nothing but how many months? 2 months. For this, you should compute HRA separately, HRA exemption. Then June to October. By the way, June to October, where is he staying? June to October, Ghaziabad is staying. In June to October, if at all, did he got increment in HRA? June to October also HRA is same, 6,000 per month. He got HRA increment from January 1st. Salary increment from February 1st. So for January alone, we have to do separate HRA computation exemption. For February and March, we should do separately. So January month, which is 1 month, we should do separate calculation. February and March put together, we should do separate. Now in between November and December, for these 2 months, we should calculate separately. Why? From November onwards. You see, actually, from November to March, he is staying in Delhi. But the problem is in January, you got higher HRA. So for January, we are computing separately. February and March, why are we computing separately? Because salary amount is increased. Now April to May, salary amount is same, HRA amount is same, he is not paying rent. Whereas June to October, salary amount is same like April and May. HRA amount is also same like April and May. But June to October, he is staying in rented premises in Ghaziabad. That's why we are computing separately. Whereas November and December, we are again computing separately. Why? Because here he stayed in Ghaziabad. Whereas from November onwards, he is staying in Delhi. So we have to compute separately from November to March. Why for November, December and January and February, we are computing separately? I just now told. Got it? Now, how to calculate HRA exemption? First of all, what are the points that are there in HRA problem? HRA received, rent paid, salary amount, and city. If either HRA amount changed in a particular month, or if rent paid amount changed in a particular month, salary amount changed in a particular month, or city where you are staying changed. You changed from 50% city to 40% city, or 40% city to 50%. So if these 4 components changed at any particular month, for that particular month or those months, you can compute, you have to compute separately HRA exception. So for April and May, how much is his salary? First of all, let me list out what is his salary income. Salary income for April and May. Salary means what? Basic plus DA for retirement. Yes or no? So from just a minute. From 1st April to 31st January 2023, his basic salary is how much? 10,000 per month. Basic. Whereas this is basic. DA for retirement is how much within the same period? In the same period, DA is also 100% of basic. Only 50% is for retirement. So which means 5,000 per month. Remember, this is per month. Whereas from 1st February 2023 to 31st March 2023, basic is how much? 11,000. DA for retirement is all, DA is 11 only, but retirement purpose is only 5,500. Okay. Now apply salary. Here 2 months salary, how much? So April and May, na? So April and May comes under what? Within January. Okay. So up to January, his salary is 10,000 plus DA for retirement 5. Commission percentage of turnover not given. So 0. So per month salary is 15,000. So here 2 months, 30,000. Here it is 5 months, 5 into 15, 75,000, 30,000. Here it is again 15,000 salary. What is salary here? Basic plus DA for retirement plus commission percentage of turnover. So that is salary. For HRA, salary definition means this only, yeah. Whereas for February onwards, his salary is 11,000 plus DA is 5,500, which is for retirement. So 16,500 per month. Now for 2 months means 33,000. So here months were given. So which means you should calculate for that many months salary. Now second ingredient in HRA is what? Rent. How much rent you are paying in April and May? 0. For June to October, how much you are paying rent? Rent paid is how much? In Ghaziabad, 6,000 per month is paying rent. 6,000 into 5, he is paying 30,000 rent. November and December onwards, he is paying rent where? Delhi. Delhi means 8,000. 8,000 into 2, 16,000 rent. For January, 8,000 rent he paid. For February and March also 16,000 he paid rent. Okay, this is rent expenditure. That's it. We listed out. Now let us calculate exemption. Let us calculate exemption. Now exemption from HRA. Exemption. So exemption from what we will calculate? First of all, how much HRA this fellow received? HRA received by him how much? Every month he received 6,000. January month onward 7,000. So January month 7,000. February and March put together he received 14,000. Now, so April and May also he received 14,000. Sorry, 6,000 per month. 12,000. So from April to December 6,000 only HRA. Whereas for these 5 months he received 30,000 HRA. For November and December he received 12,000 HRA. Now from this HRA, how much is exempted? List of the following. Actual amount 12,000, 30,000, 12,000, 7,000, 14,000. Okay. 10 rent paid minus 10% of salary. Second criteria is what? Rent paid minus 10% of salary. Rent paid how much? 0. Minus 10% of salary means what? 0 minus 30,000. Whatever it is, 0. Here it is 0. Now rent paid is how much? 30%. 10% of salary means what? 7,500. So 30,000 minus 7,500 is equal to what? 22,500. Second criteria. Here rent paid 16. 10% of salary 3,000. 13,000. So no. Here rent paid 8. 10% of salary 1,500. 6,500. Rent paid 16. 10% of salary 3,300. 12,700. Second criteria. Third criteria. Here 50%, 40%, that and all don't apply. If at all for any particular month you did not incur rental expenditure at all, for that month whatever HR you receive, it is fully taxable. Second month, you are staying in June to October in Ghaziabad, 40% of salary. Salary means what? 75. 75 into 40% means what? 30,000. Here 30,000 is a salary. 30,000 into 40%, November onwards is staying in Delhi. Delhi means 50% of salary. 15,000. Here 15,000 into 50%, 7,500. Here 33,000 into 50%, 16,500. Now how much is exempted? 0 is exempt here. List of the following 22,500. List of the following 12,000. List of the following 6,500. List of the following 12,700. Now how much is received? 12 is received. How much is received? Just a minute. 12,000 he received. Exemption is 0. So how much is taxable? 12,000. How much he received? 30. Exemption 22,500. 7,500 taxable. How much he received? 12,000 he received HRA. 12,000 is exempted. 0 taxable. He received 7,000 for January month. For January month exemption is 6,500. 500 only taxable. For February and March put together he received 14,000. Whereas 12,700 is exempted. 1,300 is taxable. So total how much is taxable for the year? HRA 12,000 plus 7,000. 12,000 plus 7,500 plus 500 plus 1,300 is equal to 21,300 is taxable HRA. Wow. If this question comes in exam, if a student does not understand the concept like this, he will definitely do mistake. I don't know how many of you are seeing this problem for the first time, but this is one of the fantastic problem. Actually, in the question, what are they asking? Compute gross salary. They are asking gross salary, not HRA. HRA we computed. Now let us compute gross salary. So HRA working note is over, no? Basic salary is how much? So 10,000 per month is the salary for 10 months. 11,000 per month salary for 2 months is equal to 1 lakh plus 22. 1,22,000. So no, correct only now. Whereas dearness allowance. Salary is increased from 1st February, 1,000. Okay, correct only. So for 2 months 11,000. Dearness allowance is 100% of basic, 1,22,000. Then is there any other allowance which he got? So basic we covered, DA we covered. Okay, HRA. What is HRA taxable portion? HRA taxable portion 21,300. So what is the total gross salary? Over answer 1,22,000 plus 1,22,000 plus 21,300. 2,65,300. This is gross salary. This is what they asked. Suppose they asked income from salary minus 50,000 standard deduction. So 2,15,300. This is income from salary. Over. So what is the gross salary? 2,65,300. You understood why we split it like this in 5 columns? Sometimes in exam you may have to do 12 columns also. If at all they ask. 99% they don't ask. Don't worry at all. First of all, people don't have that much time to design the problem itself. So don't worry. So with this, entire test your knowledge questions and salaries is also completed. So properly we have solved all the problems in original regular classroom discussion. 24 illustrations we solved, and now we solved 5, which means in salary we solved total 30 problems. But of course on the YouTube revision we only upload these 5 problems. Getting it? These are enough. Clear? Take care.